patient or why you shouldn't be patient. Is it a quick trade or is it a longer term trade? You know, thesis going in is important. Why is it going to fail? AEPH has good reason to fail, but it also has good reason to gather. So for me, I would have a very scalping mentality going into that trade today. If I was going to take a short, I would short it and I would get out for gains and just ignore it if there was an opportunity, a little pocket possible.
Sorry, one second.
So right here is where it would be putting in a higher low. That would bring in those that are playing like an ABCD pattern or whatever. And that's what could cause it to run, causing the shorts to freak out and it could turn into a squeeze and ramp.
So there's a lot of different reasons why people could buy the stock. And the two main ones that I focus on are, there's two reasons why a stock's gonna go up. It's a short squeeze or it's momentum buyers. So yeah, 1530 could support because you have day traders coming in, they're thinking it's a higher low, ABCD, whatever it is. There's also the fact that they had really important phase 3 news. So you can imagine there's some hedge fund out there that loves the stock, loves the news, and is trying to buy 1 million shares right now. And every cent lower, they're soaking up the bid. And so you don't really know what specifically is going to catch the stock, especially when it's trading this much volume. I mean, I don't know how much it's traded already, but it's traded 10 million shares on a $15 stock. That's a ton of money flowing into that stock. I don't think enough day traders are out there to support, like low floats get supported on a higher low because the lower the float, the more influential power we're going to have as day traders because there's less shares outstanding. Whereas on this specific stock, there's so much pieces of the pie being attacked right now, whether it's longs buying it because it's a higher low or longs buying it because it's got news or a hedge fund buying it because it has phase 3 results, that it's hard to predict exactly what this pattern is going to be right now. I don't know if this higher low is going to be supported because it's the momentum buyers trying to predict the ABCD or if it's a hedge fund trying to support it. And I don't know if they're wrong or right. But to make a concrete assumption that that's why it's supporting is probably not the right thesis. It's probably not going to be supported because people are thinking higher low. And if anything, it gets supported over the course of the day because I imagine a hedge fund's going to want to get in. I don't know what price, I don't know where, but I imagine that's the person that can actually make a difference in where the bottom's going to be. It's not going to be us day traders with this amount of volume, with this amount of shares outstanding, with this kind of news. On this kind of, this is usually a stock that we ignore, or I'm ignoring. Maybe I shorted out the gate, but that's about it.
Definitely there is shares short on IB. Typically there's never ever any shorts. Some shares are short.
Well, IB goes in seasons. Sometimes they're strong on their game and they have shares of like the hardest OTC stocks to get shares of, and other times they have nothing for like months. But yeah, it doesn't surprise me. The more shares outstanding that a stock has, the more readily available there's going to be shares to short. The less shares outstanding, the more expensive the locates are going to be, and the fewer there are.
Time when I see that there's shares available to short, that's letting me know that maybe everybody else knows that you should be short the stock.
And I get that mind frame, but that's also made me miss out on some of the best opportunities. And Gritani as well. We talk about it all the time where we just get sketched out for weird reasons. And that's not necessarily the right thing to do. I mean, sometimes I remember like AXW, I think like last summer, AWX went to like $30 from like 5. And there were like very few shares outstanding and there were very few locates available. And anyone that did locate it got squeezed. But to have the concrete thesis in your head, whereas like if the shares are limited supply and or if the shares are easy to borrow and in your book everyone's shorting, that could be like the right move that day. You know, you don't really know, and to have that arbitrary reason just because it's easy to borrow might make you miss a really good play. So yeah, like have a thesis, get in the stock, whether if the cost is cheap, the cost is cheap. But still just focus on trading the setup well and don't let arbitrary factors like SSR, things like that. Like I don't want that stuff to affect my trading. Yeah. But of course, if it's easy to borrow that, you know, it's just, there's a lot more novice short sellers in that stock because they had free shares. And then when there's free shares, people want to use them whenever they can use them. So it creates like this, it creates a possible short squeeze. That can happen. So maybe just be vigilant of it, but don't ignore the trade. But as long as you trade well, you ascertain fine risk reward, you have a good thesis, then you should come out on top at the end of the day. As long as you're patient enough to ascertain the risk reward, right? BNGO is much more my type of bounce play.
Have you
Just
gone through their
ignore them.
Have you gone through their filings?
Yeah.
Did you already discuss it?
Yeah. So the only time I'll short a one-day runner, the times that I'm very curious about shorting, like a massive gap up, is when I know there's blatant and obvious dilution and there's some like failed run that it's had in the past. Like I love a stock that's recently ran, put in massive volume, which is being BNGO, and then comes really down off those highs and then is gapping back up into that resistance. And especially if they've done an offering since then I'm very curious to see how that resistance, if it will hold or not. So Bingo right now is a stock that has recently run in the past. It ran to 4 a month ago. And then even after it ran to 4, 3 weeks later, it ran up to $1.50 and put in 51 million shares at $1.50. And I know on Bingo, or the assumption I make, I'm not a professional, but the assumption I make is that if I go through their filings, there's a form 424B whatever that says that there's an offering. And they have, I forget the amount of shares because I looked it up a month ago, but they have something in the millions of shares at 80 cents. So I have a resistance at $1.50 and I have a ton of money long at 80 cents. So I figure those people long at 80 cents want to sell into this massive gap up. And I assume that anyone that's in at $1.50 wants to sell because they got trapped a month ago. So that creates this dichotomy where there is predictably a lot of selling pressure. And that's a bounce play I go after. And in terms of a daily bounce play, not an intraday chart bounce, which is what AUPH was, a daily bounce chart is what I like. A stock bouncing into massive resistance, has outstanding dilution, reasons for it to come down. So as a long, those are the charts I would avoid, the ones that recently ran and did an offering. And as a short seller, those are the charts I'm usually really ecstatic to short. In Bingo's case, I just don't think it has the range for me to really be interested right now. So I'm not touching anything. If it went to 150, I would try it. If it went there all in one spike. The other option is to risk the pre-market highs. I just don't like that as much. I mean, you can, in another world or in another person, maybe Gritani is shorting $1.30 and risking $1.35 and taking massive size just to like, but $1.35 isn't necessarily the most important resistance. It's that $1.50 with 50 million shares from a month ago. So maybe I want to get in at $1.35. In theory, $1.35 can fail. For damn sure, $1.50 should fail. But the risk reward isn't perfect there. Yeah, and I'd rather get in closer to $1.50. That way it has a chance to pull and fail. Whereas if I'm in at $1.35 and it spikes and then pulls, it creates this choppy action up above where I'm in at. And then who knows how long it's going to consolidate there and who knows what direction it's going to go next. I don't want to be down for an hour and a half. Like hoping that it goes my direction. In stock trading, I tell people this all the time. Stock trading is pretty easy. The hard part is yourself. Patience, emotions, getting it at the right time, letting the chart set up, not being predictive but reactive. Those are tough things to do.
The day you was talking about did 50 million, was that a red day or a green day?
Big red day.
Big red day.
Big red day. And so the day it did 50 million into $1.50, that was 2 weeks after they did the offering at 80 cents. So for me, my predictive power is, yes, I do think it's going to be a big red ugly day. Why? Because it ran to 4 3 weeks ago. Now it's up at $1.50 from 70 cents, but there's warrants at 80 cents. So the whole picture has changed. Whereas when it runs to 4, that's not when I want it. I don't want it when every other novice short seller wants it, which is why I don't blow up. Because I don't short those crazy days into 4. I wait for weeks later when there's active dilution, when there's active bag holders, when there's more reasons for the stock to have a big red ugly candle. Which is why when it went to $1.50, everyone thought it was going to go back to 4. So all the novice longs are trying to get in and run it back to 4 because they thought it just recently ran.
So any spike is going to be a bunch of selling, right?
Right, because of the dilution and the bag holders. And as a short seller, the more selling power I can find, the better my thesis and conviction. So that's what I'm always looking for: dilution, recent runs, resistance to base it off of, and then some crappy stock. AUPH to me is not a crappy stock. That's like something that's doing something awesome. So I want no piece of it as a short seller, even if it does fail up here, which it most likely, in my opinion, will.
We've got a double top already, right?
On AUPH?
Got a double top, got a higher low as well for now. So this is like when I look at a chart like this, okay, first of all, I would not most likely be trading this, like I said, if I were not already long, had I not already locked in, stuff like that. But in general, okay, when I'm looking for entries, I'm playing first green days, right? I'm not playing second days and third days and any pretty much anything in terms of long. I only played that one day in the move. Everything's designed around that one day in the move for me because I know the dangers that occur beyond day one or after hours on day one or midday day two or the morning day two. Like a lot of stuff happens. A lot of what's going on are pump jobs for the most part, designed to extract money from retail traders, from you guys. That's pretty much what happens. And the more experience I get and the more I get into the fundamentals of these companies, that's exactly what's going on. When I was a bit more naive, I looked at these stocks much more differently when I was newer. News meant a lot to me in terms of like I really got hyped on company news and stuff like that until I realized, and then they do that offering, you know, like 4 or 5 days later, and you realize like, wow, they just put 40 mil in their pocket and screwed every single person who invested in their company that day. They understand the game too. They know they're day traders. They know, and the people who are really in charge are like these big financing companies, H.C. Wainwright, Optum, like all these people are the ones who are kind of driving these stocks, believe it or not. There's a lot of things that they can do once you get into what's going on. And if you take nothing else away from like the next 2 days, you will know what you're going to be trading. If you want to trade small cap and if you want to buy small cap. And my hope is like the more we get into it, the more it should help you with any psychological issues you may be having. FOMO is the main one. FOMO, I still get FOMO, but it's way more contained. You know why? Because I know what these companies are. I know they're all pieces of crap, and I know that they're trying to extract money from me. And that's really what's happening. Even if you're just day trading it, you're not trying to be an investor. If you are going long on a stock, you are buying their stock. You will get a letter from that company sometime in the future about your investment in that company with, you know, whatever. So if you know how terrible these things are, for me, it solved so much. Like that feeling of like, oh, I got to be in it. Like, oh, it's going without me does not exist as much in me. Cause like, okay, why do I want to chase crap around? All right. Like it's literally a piece of shit and you want to be in it, you know, like so badly. Those are really, really unhealthy thoughts. You know, it's a really unhealthy place to be. It took me a long time to understand that. And it really took me getting into the filings and fundamentals of the company and understanding how they make money, where the money comes from, for me to paint this picture and be able, it took a lot of that FOMO stuff away. If you understand that you're playing this game, they're super crappy stocks, but they will run like 1,000% at times or 100% in the day or whatever it may be, 50%. And I'm just trying to take a little piece of that. You know what I mean? If you can have that kind of mentality, it's hard to long. And most longs get into the same shit. You know, they're watching a stock that spiked like a month ago because they had some good news and you're like all hyped up on it for some reason. Meanwhile, they're like diluting, you know, or it's a stock that, you know, we're going to get into what I look for in terms of first green day. Because first green day, sure, super vague. Like anything gapping up could be a first green day, but I have very specific parameters as to, you know, what's included for me in that. Everything I've done is designed to find the runner, whatever the biggest runner is in NASDAQ that day. Sometimes I'm wrong. Most of the time I'm right in terms of what can and can't run. And then it's a matter of, will the market let that stock run that day or not? A lot is out of our control. A lot comes down to what the markets are going to give us. So in a hot market, things will run like crazy. Those are really great times to make exponential gains on a small account or blow your account up. You know, there's two sides to every coin. I'm looking for the most volatile stocks, which also means you can lose the most money on those. If you know, it's like those massive like tsunami wave surfers. You know, they like 100 or 200 foot waves or something like that. That's the equivalent of the stocks that I trade. They're like that. They go fast, they go far, hopefully, and then they violently die. You know, and that's what creates opportunity for people like him. Most of the people I know who are successful trading small cap are short sellers. And there's a reason for that. Odds are on their side, right? If they're good, if you're a good short seller, you know. A lot of amateur short sellers can make a lot of money for a while and then just blow up in one day if they don't know what they're doing. So it's super dangerous as well. I'm looking for that one day, right? That's what I am looking for. I am looking to find the day where all the shorts get destroyed, and they all have to cover creating excess demand on the stock. Hopefully it's a stock that doesn't have excess supply from dilution, which we're going to get all into because that's pretty much, it's everywhere. If you're trying to go long, you have to eliminate the stocks that can't run. The stocks that can't run for the most part are riddled with dilution, excess shares being dumped. Look at AUPH. What moves these stocks is supply and demand. You know, that's on the most basic level. That's what you're seeing manifest on the charts. It's supply and demand. That's it. I'm looking for stocks that have too much demand somewhere. And then I know not to be there long, at least. And, you know, for shorting, which I'm going to get back into, it can provide edge there as well. So it's one of those things that that's what we're going to try to accomplish over the next 2 days, is just help you guys find the most dangerous stocks so that you don't long those. That will naturally shift your attention to stocks that can run. And then it's a matter of figuring out how to play those, because that's a whole nother ball game altogether. Like I said, I'm trying to show you how to find this tsunami wave to ride, and then how to ride it's a little bit different. You know, that takes a lot of like falling down, a lot of trial and error. You may find that where I'm going to lead you to, you don't like. You may find that you don't have the ability to trade low float stocks. They're tough to trade. When we have a stock go from like 2 to 8 back to 4 in one day, a lot of room for good gains, tons of room for blowing up your account. So, especially if you're long and you're a chaser, or if you're short and you have problems cutting losses. You know, those are the two most dangerous people to be, in my opinion. A short that can't cut losses, an aggressive one at that, and then a long who chases. Most longs chase, all right? If you're buying a breakout, if you're buying strength, if you're buying that intraday high a day break, which noobs love. I used to love that. That was an entry for me. Break high a day, like I would buy that. I almost never buy it now. I found it's not a good place to buy. Hold on one second.
You're probably buying from Reddit.
No, probably from like Gritani, maybe Ducks at that time. You know, like what happened with my trading is that I watched Tim Gritani's trading tickers, along with a lot of other work. But just the way things worked out, it resonated with me so much because I'm like, oh my God, I buy everywhere he's short selling. This multi-million-dollar stud short seller has this guide, and I look at it and I'm like, all his entries are my entries, which isn't good. It shouldn't be the same. So in my head, I'm like, I got to flip this completely. You know what I mean? So all the setups that I was, and it's pulling back now too, all the setups that I had to look at differently, which leads me to what we're going to get into in terms of entries and stuff like that. And the way I go about looking at these charts on first green days. Just because I'm playing first green days, I'm not, like I said, trying to catch that spike. A lot comes to, I mean, this chart, for example, this is not a chart I would necessarily trade, but you can see, give you 15 minutes, you have an open price, you have a low and a higher low. I can work risk off of something like this. I can't work risk off of something that just starts spiking, right? Much different. Problem is like most new traders start ignoring this. They're like, oh, it failed, you know, and they don't want to buy it because it failed. That's when I start watching it. I love stocks that gap up and fail first thing in the morning. Gap and crap. That's what it is. Gap and crap reversal is like one of my favorite entries. So we're going to get into that too.
And it's totally the opposite on the short side. The failure, the shorts start chasing the failure down, which is what creates the gap and crap reversal and then the inevitable squeeze over day high. It's just a chaser as a short seller, pushing it down.
When you say first green day, that's like one of the things that's like a splinter in my mind. When do you determine that it's a first green day? When it goes from red to green, or at the end of the day? You listen to other people, and they're looking for the first green day at the end of the day to buy when it's closing near highs, all that.
Right.
So I've heard a lot of different things. What's your definition?
Yeah. So first green days, I'm trying to play the morning, particularly on first green days. I don't want to be sitting around all day. Okay. Personally, there's plenty of range in the morning if I've done my job correctly to take whatever I need for the day and hopefully the week, whatever it is. So I don't want to be sitting around through midday in a stock necessarily, but so here's technically like a first green day on news, big gas gap up on AUPH. But if you look, I mean, it's running it got down to the threes, just over a month ago. In the last week alone, week and a half alone, it's gone from 5 to 8 and then gapped up. So some of this has been priced in already. This is not a chart I would trade. First green days to me are generally stocks that have come from like 5 or 10 and they're back down at like $2 and they pumped. And they're generally charts that trend downward and then that first gap up day. Problem is there are a lot of variations in that daily chart prior to that determine whether or not I play that first green day. So it's a very, first green day is so general, and that we're going to narrow that down for you guys into what that means to me. Say a stock was running like last 3 weeks ago and then, got stuffed, whatever, it's done. And then gaps up from news like a couple weeks later. That's no longer a first green day to me. If it just ran with volume weeks before, you see what I'm saying? We'll get into it. We'll get into the exact parameters of that.
But I think a clean chart gapping up with news and volume, a clean chart though is important, and the gap up is important. Clean chart, gap up, first green day.
You say clean chart.
Like bingo is not a clean chart. If you look at it on your screen, BNGO,
I'll put it up.
not a clean chart. So yes, today's a first green day, but not necessarily one that we would consider playing.
Exactly. So bingo, first green day. Okay.
Over there.
First green day. All of this is no longer first green day anymore. Obviously, a bunch of shit went down over here and here. Most likely, like this gap down. Obviously, is that what happened right here? Yeah. So they did an offering. They ran big, had a couple days, a pump job, maybe 2 days later, whatever happened, and then an offering. And then you can say, here's another pump, 67 mil that day. Couldn't get up there. There's obviously stuff going on. Today's a day I easily ignore. Not a first green day to me. More like it's going to be a short. It's more a short than the long.
It is a short.
So, I mean.
I'm not short.
I don't know. But charts like this, I hate. A day like today on BNGO, I will never trade long. Almost ever.
But the point is, you could consider, some person out there could consider this a first green.
Exactly.
Because it's up from the.
It's gapping up first time.
And I get it. I get what anyone would be saying, that first green day, but it's not to me.
But it's that one that was a month ago.
Exactly. I'm looking for one specific move, which is the one part of this chart's life where it's going to go parabolic, which it already did. Once it does that, it's usually dead for like a year, for the most part. Once they've done their offering, it's changed. This, it's only been what? That was October, mid-October. Yeah. This ran happened in mid-October, and they are fundamentally now, a month, 2 months later, completely different company. They have more shares outstanding. They won't move the same. And then when they do move into certain regions like this, it's going to be riddled with excess supply. Warrants, convertibles, dilution, whatever it may be on BNGO.
Well, if it ran higher past 150, would you still consider it a bounce, or would you consider it even if it got to like almost 4?
You know what's funny? I don't care. I would bet a lot it would not go to 4.
Yeah.
But you still have to be careful. Like if you're a short seller, you still got to be careful. You never know. Fundamentals, especially, like there are levels where you would think because fundamentally they're so jacked up that it should not be able to run, but they'll still run sometimes. So I don't use fundamentals. Like, it's not everything to me. It's just a part of what I do. But I find it to be a very big part of what keeps me safe and keeps me finding plays that at least can run. If you know you're buying an area of a chart where there's like some institutional investor has millions of shares to dump there, then you're barking up the wrong tree. It's on you. If you don't know, it's still on you because you haven't taken the time to learn how to do that. Got to do it. We're going to get into filings together.
So that day back in October where 67 million shares and it ran from what? $1 to $4.50.
Right.
If they dumped, say the float, let's just say they doubled the share count. Now it's going to have to run 134 million to do that same.
Yeah, I mean, it depends. Obviously, the intraday price action, you don't know what's happening with shorts, longs, where everyone is and what's going on. But yes, in theory, yes. Which is why like the big cap stocks don't run that much in terms of like percentage. They're big ass floats, like billions of shares of some of these companies, trading at like $100, whatever. So they're massive cap companies. They don't move that much because there are so many shares. That's why they're stable as well. It's a good thing for a company to have a bunch of shares at a high price. It's a market cap thing. Companies I trade have like 2 million shares and they're trading at $2. You know what I mean? It's a big difference. And then there's a big difference between 2 million shares and 10 million shares or 50 million shares, which you'll see some of the low floats, most of the low floats at a certain point, they'll start at 2 and maybe 2 months later, they'll be at 50 and in extreme scenarios, like extreme dilution. Or 2 to 7 when you look at it a month later. Their float just changes and changes and changes because every time, once that move is done and they do that dilution, every new pump, every new PR is just designed to get more money. You know what I mean? Now it's in place. They just know they have to get their stock to a certain price to get paid. So it's really dangerous. That's one of the reasons it's so dangerous to be long. ASLN last week, anyone who's been trading right now, watch ASLN, right? Crazy ass move. They did a midday offering this week or last week, Monday. I think Monday or something. I think Monday or Friday they ran and did a midday offering. So it's, you got to be careful. You got to be really careful. That's why I don't play day 4, day 5, day 6. That's the number one reason I don't play beyond this first green day I'm looking for most of the time, right? Any questions on that for now?
Yes.
Go for it, man.
These terms, offering and dilution, and the finance companies and PRs and all of that, that's like a big whirlwind to me.
Probably for a lot of you. If you're new, dilution, it's like, what the hell is that? We're going to talk about it.
I'm getting somewhat of a handle on it, but there's like some gaps. So they borrow money. Let's just say that I'm the company, I need tons of money. I'm a sketch biotech.
Right.
And you're the investor, you're H.C. Wainwright.
Right.
All right. So when I come to you and I say, look, I need a bunch of money, you're like, well, I can loan you a bunch of money, but you're going to have to sweeten the deal. So income the warrants,
yes,
convertible debt,
so whatever it may be.
So if I say, all right, well, I need $10 million, you loan me $10 million, but you say, I want 10 million warrants with it or whatever. I want shares at a discount.
Right.
And it's trading at $5.
I want 250. Yeah.
So at that point, me being the company, do I sell you? I'm not selling on the open market to you, right? I'm just selling. How does that work? That's
okay.
One of the gaps.
And you know what? There are so many ways it works. Okay. That's what's kind of difficult about it. I mean, the ways they structure the deal, it's like unlimited what they can do. Right. So it really comes down to like each individual offering can be different. They can do like an at the market offering, where they can literally just sell into open market up to a certain amount, usually of money, the company through a broker dealer like H.C. Wainwright or whoever else it may be, and then they get paid a fee. So sometimes they just pay H.C. Wainwright a fee, and they facilitate dumping shares for them. Sometimes, yes, H.C. Wainwright will get 1 million shares at 250, if it's trading at 5, they'll get $1 million at 250 and $1 million warrants for a penny each. Okay.
So they're buying
So
the
yeah, and they'll
rights
put like a $250 exercise price on those warrants. So the second it gets to 250, they're not making whatever. It's not like an option where if your strike price is 250 and it gets over that, well, it needs to get far enough over that for you to make more and more money. That's still the case. Whatever, they still want the price higher, but they're just making basically 250 a share on those warrants on 1 million of them.
So they got the warrants at a penny.
Right.
They exercise at. So when they exercise those,
It's like $249 a share in their pocket.
With a call on options, they exercise it. They exercise
Right,
their
the
right
shares,
to
yeah.
buy.
Right.
So with a warrant, are they exercising?
It's the same
their right
thing.
To buy at a
Yep.
penny?
It'll convert to common share and they dump
sell
it.
Okay. And they're selling it to the.
Yeah.
amateur
Imagine if you had
longs.
2 million shares of a stock trading at $2 and you got it for a penny each.
Yeah.
That'd be cool.
19 million.
You would sell them, and you wouldn't care if it was at 2 or at 5. You would just sell. That's how they make their money. It's the way I see it. It's like payday loans. Everyone knows what payday loan is, or like title loans. That's what those. It's like the title loans of the finance world, and they crush. Billions and billions of dollars are going through small cap through these companies, not through us. We're small money. We're small. Ducks is small beans. Ducks is big beans. But I mean, for us,
Ducks has big beans.
Ducks got beans. No, but I mean, for us, that's big size. But for these guys, this is just like daily small beans. You know what I mean?
So when H.C. Wainwright, they've got their warrants. That doesn't go towards paying back. That's convertible when you're talking about that, right?
Right.
So
And again, it
let's say
depends.
they loan $10 million. They get when they've got Class B convertible shares.
Yep.
Then when they can sell those shares because they sold them to them at a discount.
Yeah.
So when they sell 10 million at 50% off, that's not sold into the open market. That is when it hits the market. When does it hit the market? I guess is my question.
Yeah, and you don't know. I mean, sometimes you'll see it if you know where the levels are and stuff, and you're watching price action, and you won't know until you check the filings later on. So but you will know how, where, when they can do it through the filings, and it's always different. It's always different. But if you go to the prospectus, when they do an offering, we're going to get into quite a few of these together. For those of you who don't know much about SEC filings, this is probably just like if this were me and I didn't know anything, I'd be like, what the fuck are these guys talking about? But you will know. And at some point, just remember this. It's super, super, super important. And I find a lot of what separates some of the people I know who are good at longs and shorts, this is a big key. Okay. If this sounds like something you don't want to do, you probably shouldn't trade. Honestly, it sounds like shitty. Obviously,
Wait. I remember in year 2, this was not something I wanted to do, and then year 4, I had to do it. So just in the beginning, I didn't want to do it. I thought this was too much work. Screw the filings. What's Mark Crook talking about?
Yep.
But then 2 years later, I found reason to go attack it, and it's been the best thing for my trading. So maybe you don't want to do it. Just adhere his advice and think of it as like a puzzle, and you have to decode the puzzle.
I will tell you for long though, if you want to be long, which you kind of have to be if you got a small account, okay? Shorting is tough with a small account. It's really tough. It's doable, but it's dangerous. It's one of those like any day you could just blow your account up, particularly when you're newer or older or more experienced, But like to go long, I don't see any other way. I don't see any other way to eliminate all the shit because there's so much shit.
Yeah.
I'll have like at least 10% gappers every morning, different price ranges, some with catalyst, some not, some OTC, some NASDAQ. If you look at my market view, for example, this has, right now, it's got 3,000 stocks on it, okay? None of which I'm looking at. I don't care about all the stuff in between. We'll get into this scan a little bit later as well, how I use it, but all I'm focused on are these pretty much. I'm focusing on these top gainers. generally ones with volume, but there are just so many tickers. Okay, a lot comes down to experience. I can tell you most of these tickers I've traded, like, or I've seen move at some point. It's cyclical. These stocks, they pump, they run, they dilute. They do a reverse split at some point because they have to stay listed on NASDAQ. We're going to get a lot into that. That's a big part of what I do as well. And then it's just this cycle, okay? It's this cycle of like, put a PR out when they're low float, get the pump, do the dilution, and then it's like dead for a long time. Go back to the pennies. And that's the cycle most of these penny stocks are in. They can't make money any other way. When they get down to the pennies, their float is big because they've been diluting so much, and they can't move anymore. It's like a really fat lady or guy. Sorry. Fat lady, fat guy, can't run as much. It's like a super skinny dude, like a Kenyan marathon runner. That's what these are like when they're low floats. They're going to fucking go forever. Not necessarily, but they can move. And then they just like eat too much for like a whole year and they can't move anymore. That's pretty much like a really accurate picture of what these stocks do. I'm trying to find them when they're skinny. You know what I mean? And shit and fit, ready to run. Play that first day knowing that at any point, like, the company is going to fuck everyone. I mean, it's really that simple. If you can understand that macro picture, you'll be in a better position than most long traders who are coming in thinking like, oh my God, look at this news. This should go forever. I'm going to be all in and just sit there as it tanks. And then it has to bounce because of this news or whatever. That's not what's happening. There's bigger forces at play. Pretty much all across trading, you'll hear like follow the big money. I heard that. You always hear that, like follow the big money. I'm like, what the fuck does that mean? Well, follow the big money. There is big money. Maybe it's just, you just don't know what that big money looks like. It's big ass money. It's billion-dollar companies pushing billions of dollars through these stocks as investors.
And a lot of those dollars are coming from us.
Most of them, almost all of it.
Yeah. So when you talk about the dilution, that's another one of those gaps for that's the H.C. Wainwright.
And dilution's not always bad, okay? Dude, if it's like a biotech who had a phase 2, AUPH did this, okay? Biotechs need money. If they have like one drug in their pipeline, they have no revenue. Sometimes they'll get like a licensing deal or like some kind of research deal where someone's giving them money to kind of help push it along. AUPH did their offering. It had run to 10 though, went from 3 to 10 over 5 days. And then they did an offering at like $6, same kind of thing. But they needed that cash to get them through phase 3 results, which got them to where they are today. So it's not always bad. Generally, in the short term, it's a bad thing.
You said an offering at 6.
It was at 10. They priced it at like 6 or 7.
Who priced it at 6?
Whoever did the offering with them. I forget who it was.
That was H.C. Wainwright.
Yeah, it was H.C. Wainwright. If it were, yes.
Then how are they offering at 6 if it's at 10?
Get this. If we're going to talk about I don't like to talk about conspiracy theories and stuff, but the more I get into the fundamentals, the more I understand these stocks are manipulated by big money at times. There are provisions in these offerings with these investors where they can short the stock that they're investors in. They can short it and cover with exercised warrant shares. You know what I'm saying? Like they can naked short and then cover with the shares that they're about to just dump everywhere. So,
but they're the ones doing the PR, right?
No,
they're not.
No, it's the company. The company puts out the PR. Institutional investor does the rest of the work for them. And they all know how to do it. They know what we're doing more than we know what we're doing. I promise you that. H.C. Wainwright knows exactly what retail does. They know exactly where to dump. That's why when you see high day breaks get stuffed and then it's at low a day, next thing you know, if there's dilution there, that's what you're seeing most of the time. You're seeing H.C. Wainwright saying, thank you very much. All the chasers who are buying that high day break, it's usually the biggest volume candle of the day too. Million shares in that minute, and then it dumps because they're just sitting there like cha-ching, 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 cha-ching.
And the retail traders buying at that high day break, thinking I got to get in. They got the FOMO. They're buying from
correct
H.C.
Yeah, exactly.
Short.
New shares. So I'm not buying shares from you. You're selling it. I'm buying shares from H.C. Wainwright, who's literally jumping in line and just dumping it out. You're trying to sell it. They're like, nah, we're going to dump. So, I mean, it's a really sketchy. Penny stocks get a bad rap because they suck. Okay. But they are also every single day the most volatile stocks. The biggest percent gainers every single day are penny stocks. And if you have a smaller account in particular, you can't trade Google. I mean, maybe options or something like that. But what can you buy one share for like $200-300, whatever it's at right now? Hey, yo.
So to wrap up the whole dilution and
Yes.
warrant conversation,
For
there's
now.
a guy on YouTube, Ricky Analog. That's his name. You should watch his videos. He goes over ATMs, warrants, and preferreds, which are 3 different methods of dilution. And that's 3 different manners of who's doing the selling.
What's his name?
Ricky Analog, RICKY, Analog, ANALOGUE. It's just a guy that I've met him at Traders for a Cause, cool dude. As well as I found his videos when I was in Europe this summer, and I spent 4 hours watching them because I have an understanding, but I liked how he broke it down, picked up a couple things that I didn't know before. And I would recommend, to solidify this conversation, go tonight, watch his videos, get an understanding, come back, teach us tomorrow.
Somebody was talking about it, Cypher.
Yeah. He's good. He breaks it down and it's free. It's on YouTube.
So like AUPH right now, bro, if you're shorting it,
Yeah.
you may be cutting it right now. You know what I mean? Like you probably have to cut that. If you're, I mean,
But if you had the scalping mentality
then you'd be fine.
and you cover at low of day, when it holds that double bottom, and you're fine. So you could play it, but you have to have the mentality going in. What you're going to do? Why might it support?
Yeah.
Why would it fail immediately? That failure in the morning was predictable. That base that it just built is also predictable.
But yeah, it's one of the, I have a couple guys who do really well shorting first green days in certain circumstances where they have, you know, their edge and stuff like that. And that, but I always tell them, just make sure that you're just taking that predictable pull, because there are, even first green days, there are levels that will pull predictably. The problem is when you think it's a home run and you're just going to be super patient and sit there, and then it does something like what AUPH is doing right now.
Yeah, that's
You could have locked in on that bounce, $1 a share, something like that, something close to that.
50 cents.
50 cents a share, whatever.
that's my biggest issue. Like, I want to go for home run. I want it to go all the way down. And,
But you have to have reason
yeah.
for why it's going to go all the way down. Like morning panic, and then like we were saying earlier, morning panic was predictable. Who knows how far it's going to go? I don't know. But people are waking up to 175% gap up, and there's dilution. So predictably, people are going to sell come market open.
But the dilution. Did you go into the SEC
Woo.
to find that out? Or
Sorry, guys.
I haven't looked at AUPH at all. But
normally
I'm-
that's what you do?
Yeah, I'd go into the filings. I'd look for form 424B, whatever the number. I just read it, and I make an assumption. Generally, if I see them, it means like, okay, it's on my short radar. That means even just the presence of dilution being there makes longs less eager to sell or less eager to buy, and shorts more eager to pile on. So just knowing whether I'm right or wrong at least puts me through a process that makes my thesis have some validity to it, and it's not just candlesticks, which is what I like. That makes me feel better.
Sometimes you find that they'll say that it was dilution just in the SEC filings and not do a press release about it, or do they have to do a press release?
I don't know if they have to do a press release, but they do have to file it within the filings. But I don't know if they have to press release it and
Or
say,
they even do that, right?
yeah, there's a process. It's like an S, they do a S form, and then there's an effect, and then there's a form 424. I think that's the process.
Where at in that line generally does the press release come out? We know that's to jack the price, but
Well, he's talking about a press release for the offering, right?
Offerings, yeah. Well, offerings and ATMs are different, right? Or,
ATM is a type of offering,
oh,
and there's many different types of offerings.
okay.
Yeah, it's tough going for the home run as a short. And in theory, like best case scenario as a short seller, you're making 40%. Like that's usually best case. You're never going to make 100% because stock's not going to go to zero.
I just took off 300 shares there. I'm just kind of piece off a little bit just in case.
How many shares did you buy?
I had 4,500 at 466, and then I took off my first this morning in 19s. Right when this happened, it gapped up to $25. I was waiting for my bags at the terminal. It really sucked. I was like, it's at 25.
What?
And then it was just immediately. I mean, I couldn't be there quick enough, unfortunately. So, which is okay. Yeah, I can. It was just quick. It was after hours, and there was a lot of stuff going on
too.
What's that?
I caught that bottom.
Oh yeah, this is kind of what I was banking on this. Obviously, it did break down a little bit beyond 15. I'm glad it held. If not, I would have been in a little bit of predicament. So this trade has worked perfectly to plan. I didn't really have an exit strategy because it's in uncharted territory now. All-time highs, biotech. But I like to think of it like past kind of repeats itself and what happened last time. It gapped up. It actually kind of closed near its lows and then ran for 3 more days after five more days, So, I mean, that in my head right now, I do have a little bit of a big picture with the shares I have left. I've already locked in 30-something K on this trade. I don't, the rest is, it's important to me. I want to trade it well, which is why you didn't see me panicking out at 15. But at the same time, I've locked most of what I wanted in already. The rest of this is bonus material for me, which is fine. This is not a normal trade for me. It's just an awesome part of being a trader is that at times you will find edge. You'll find some kind of full conviction trade, which is like, doesn't come that often where I have conviction I'm swinging something into results. In fact, I've only done this 2 other times, and the other 2 times I got fucked, like bent over hard. So this to me is like, it doesn't happen that often. But as a trader, if you stay in the game and you're grinding out daily wins or, small losses and you're just kind of steadily growing, for me, there have been a handful of trades that have been amazing, where I feel great. Like this is if I took everything off at like $17, $18, that's a $60K trade there. And it didn't kind of feel like enough to me because it was at 25 earlier and I'm a human. The same thing would happen to you if it was at 25. I don't want that it does affect me, but I still have kind of a big picture thing going on. So I was happy to lock in at 19 this morning. If not, I would have kind of been shitting myself at 15. You know what I mean? Not shitting myself, but I would have been a little bit upset, that we're live trading and I watched 50K go away or whatever it was. So that would not be a good example. But I've locked in. I've got a big picture. This is not the usual. This is how I would trade though if I were to be trading today with a new position, kind of. This is a pattern I'd look for though. This is a gap and crap reversal. If this were like a low float, something like that, trading at like $2 and this pattern, I'm looking for that. And my risk would end up being $15, okay? And all size would be based off of that. So if this lower at 2, that would be my risk. And any size I want to take as this chart goes is going to be based on that. Again, look, low a day. Here's the open price / high a day, okay? Here's the low a day, first 15 minutes, okay? Right here. You can see how it's reacted to those prices because look at all that freaking volume. Massive volume on the open, massive volume on the bottom on the low a day. That's what I can work off of. I know that this is a level that should hold. It did. It held twice, okay? And then ripped. And then look at this. We got the open price basically right around here, 1670. For now, that's kind of holding as support on this push. So those are important levels as opposed to non-important levels here, like just kind of random chop in between. All of this stuff in between here, all this means is as this goes higher, my size gets less because I'm still basing risk off of this. This keeps me from getting shaken out when it does this. You guys are getting like, you guys might think higher high, oh shit, it's going like, then you're cutting. I'm using low a day. You know what I mean? I don't get shaken out by pretty much anything else if that is my intention. So it's still a good pattern. And if you look at this, 15, 16, 50, 17, that's $2 a range. If this were obviously, if you transpose this to a lower price, that's good range if you're risking off the bottom. So 15, I can get like a 15, 20, 15, 30 average, have 20 cents, 30 cent risk, and $2 reward if it gets back to the open price where it crapped from. Does that make sense? A gap and crap when it craps is still the biggest gainer on the day if that's what you're trading necessarily. AUPH was the biggest gainer today. it gapped. It looked like it was bad, and it held at 15, which was still up 100% basically on the day. You know what I mean? So, any questions on that? There'll be a lot of questions. Hold on 1 second. One more thing. Yeah, I'm going to. 1 sec, guys.
So, hey, Stokes said in his conference that when if it's talking about something like this, goes back to 30% or less, still has a chance of going back up.
Okay.
Do you see that you do it the same way too? He said he talks about like dollar block and all that stuff.
Yeah.
So and stock goes down 50%, it might spike, but eventually it's gonna come back down.
Right.
And then you start that goes down, like got something goes down 70%, within a day it's just gonna keep going down no matter what. Do you see it that way as well?
So I don't have the statistics that Dux has. I don't learn from Dux. I don't study. So I have no clue. And the few times that I have tried using Dux parameters, I get blown up. I get wrecked. Because I just don't know how to use his statistics. Maybe I'm not focused on the right stock or the right shares outstanding, the right market cap. I don't know what it is. I know that Roland likes when a stock dips 30% off its highs. Like I know he would imagine that a stock has a chance to come back off 30%, and the 50 and 70% thing that you were talking about kind of goes back to what I was saying this morning, whereas the farther it dips from the highs, the more I think that that bounce attempt is going to inevitably be a lower high. Whereas if it doesn't fall that much, I think that bounce attempt might just break right through. So yeah, I mean, I imagine if a stock jumps 70%, it's going to be a lower high. But I hate trading like that, because then I have all this conviction because of some kid that said something, and what if it's wrong? It's like misplaced conviction for me, but that's just me. You know, I've been trading for as long as I have, that I'm stuck in my ways. And the few times that I have tried whatever Dux talks about, it hurts me. So I know not to follow Dux. I don't follow him on Twitter. I don't follow what he says. I don't care what he says, because I just can't trade like him. I don't have those statistics. I'm not a statistical guy. Most of my trades are not based off statistics. They're just intuitive feelings and experience. But if I see something crack really hard, then I'm going to go after a lower high, just like he would do. I just have a different reason to do it.
That's just the inverse of looking for a higher low if you're going long.
Yeah, lower high, higher low.
Yeah.
It's the exact inverse.
Do you base your risk the same way that Roland does, just on the short?
It's my risk is always either high of day or green red. So like when I'm shorting a stock, I'm shorting it after it's already had massive extension, which is why I think lower highs work. For me, I'm not shorting the lower high on the first green day. I'm shorting the lower high on the fifth green day after it's panicked red and now it's doing a lower high, because I think that that day should get sold into. So if high of day and green red are close together, I think it's one probability for it to break green red on a fifth green day. After it's fifth green day, it's panicked red, so it's the first red day. It's one statistic for it to gather, bounce back up, and break green red. It's really tough for a stock to do that on the fifth green day. It's a whole nother thing for it to break green red and then simultaneously go and break high of day. So if green red and high of day are close enough together, in my mind, statistically, green red is tough, high of day is even tougher. So in that circumstance, I want high of day if they're close enough together. But if high of day is up here and green red's down here, then I have to change that plan depending on what the chart is in the scenario. But it's always green red or high of day. I just like to risk the area where my trade is no longer valid. So like a lot of the times I'm shorting a first red day. So if it's going green, it's no longer a first red day and my thesis is out the door. In the ideal world, it just stays red. And then I stay patient all day. It doesn't matter my entry, in theory. It's just if it goes green, that's when your entry matters.
Do you size in?
I try not to.
So just buy 5 or sell 5,000. Buy.
Like if it hits
5,000.
that area where I want it, just get in. You know, it's not about. I know that when I scale in, I got bad entries almost every time. I have a lot of size. When I scale in, what inevitably ends up happening is I become full size when I'm taking a loss. Because I scale as it goes up, and then all of a sudden I'm full size and I'm taking a loss. Whereas if I don't, so I scale in and I take a full size loss and I have a fat position. And or if I'm scaling in, maybe I scale in only 25% of my position and then it fails. And I don't have that full size. So if you think about it, I'm taking losses that are full size and I'm making money on a 25% of what my full size would be. So that relationship will never make me profitable. So I try my best not to scale in. I try to just have that big picture thesis of what the stock should do that day and just ascertain a price that is decent risk reward. And in that scenario, I can make money. But if I'm scaling in and taking losses when I'm scaling in, the only time I'm taking losses is when I'm full sized. And when I'm making money, I'm not full sized. So that's tough. And it's infuriating, actually is what it is. So I try not to scale in. I try to just have like, okay, I want this much money worth of this stock with this amount of risk. And at this price point, that should be great if it gets there. And if it doesn't get there, then I ignore it.
So Roland, when you was talking about your entries and low a day being your risk, let's just say a small account, I can only risk $100. And so it made a little bit of a lower high. It's 5 cents off the low. Let's just say the low was $1. Now we're at $1.05. At that point, if I can risk $100, then I could, on 5 cents, that's what, 2,000 shares. If I went in full size at 105, and then it breaks down to 99 cents, hitting below the low, if I said that's my cutoff, that's where I'll cut the trade. Like at 105, if I went in half size and add to a winner, I hear that a lot. Is that something you subscribe to? How do you?
No, okay. Since everything's based on risk, first of all, size I have found to be overrated. This is one of my biggest trades ever. It's a 20K position. Initially, 25, 30K position initially, which is big for most of you. For me, it's not a lot of size. It's 4,500 shares. I don't really look at it as like how big is my dollar position size ever. First of all, I'm never looking at it like that. I'm just looking at how many shares I can get risking whatever that level may be. Okay. That's how I think of it. I'm not thinking of, oh, this is such a big dollar amount in my position. It's just a share thing. It's just a simple, basic math thing.
Yeah.
5 cents risk, take your 2,000 shares if you got 5 cents there. Okay. If you want to risk $100, okay.
If I wanted to risk $500, I'd get 10,000 shares.
That's how, so I'm always thinking in 10,000 share increments off the bat, personally anyways. If I can get to my preferred size, I love 10K shares of, which I don't get often. That's high conviction for me. Depending on the price, 10K shares of a 50-cent stock, way different than 10K shares of like a $5 stock in my eyes. Reason being, a 50-cent stock, obviously it's, obviously 10K shares or whatever, it's not that much of a 50 cents. That's a 5K position, dollar value. Even though I'm not really thinking of it like that, what I am thinking of it is a 50-cent stock moves 10 cents, it's moved 20%, okay? For me to take advantage of that stock moving 20%, I actually need more shares. Does that make sense?
Yep.
So, I mean, a stock that has range that's trading from like 10 to 15, I don't need that many shares necessarily if there's a lot of good range. But you have to understand a stock that's at 50 cents, once it gets to $1, it's up 100% on the day, okay? So now if you're buying it at $1, yeah, maybe it's only up 50 cents, but it's up 100% as well, which plays into psyche. A lot of people, even if you're an undisciplined long and you're a chaser, a lot of people won't buy it if it's up like 200%. You know what I mean? Kind of takes what I find. Generally, if you see it going from like 2 to 300%, yeah, they're chasers, but short squeeze. Shorts will ultimately just screw each other in situations like that. But yeah, that's all I'm thinking is how many shares can I get here risking that amount? And as the move goes, that number always comes down. If I'm going to take 2,000 shares at 2, why do I want to take 2,000 shares at 250? You know what I mean? Even if you think of risk level setting up, it just doesn't make sense to me. If my initial goal, and since I'm playing off low a day so much, it's a very systematic thing I have going now, where I don't have to think about how much I'm risking. I just know like I got 10 cents. I'm going to risk $1,000. I can take 10K shares here. And that's my baseline. You know what I mean? If I want to risk 500, then it's 5K shares and 10 cents.
So in your guide where you grabbed 5,000 shares and then it made a move and you set another, say, lower high or higher low.
Right.
And you grabbed another 5,000 shares. Your rationale behind catching another 5,000 shares was 5,000 shares your full size, and then you decided to go another 5,000 shares, make 10,000
Right,
full
right.
size. But now, did you raise your risk or raise your
Right. And that's why I don't like getting into that game. I love getting a great average. It makes trading so much easier, long especially. We know how shitty they are. So like average to me is a very big deal, okay? It's not necessarily worth it to add shares higher for me. Sometimes, but very, very rarely am I adding to a winner. I'd rather just get the shares I can get with that risk and not add. You know, I don't want to add as it goes up personally. Yeah, I mean, there are times where it'll work. You'll get a better average or something like that. But there are a lot of times where I've played that game and then next thing I know, I'm down on the trade because I averaged up. And then I'll cut it and like my initial risk would have held and then it rips or something like that. Stuff like that happens all the time when I try to mess with size like that. Only time I'm doing that is with total purpose. Like if I didn't get the amount of shares I wanted and I'm still able to add mathematically on the pullback or something like that and still have my risk completely intact, I don't mind that at times. Most of the time I get what I can get. If I miss my entry, so be it. If I only get 1,000 shares, so be it. You know what I'm saying?
If you bought in, let's just say, bought 5,000 shares, 5 cent risk, you're risking $2,500. No, 250.
I got you. Yeah.
Whatever.
Yeah.
Anyway, let's just say you sold half into the first push, like you.
Yeah. Then would I then add to that position maybe if I have a winner already?
That's my question.
No.
No, just leave it on.
You know what that stemmed from is double dipping. If you watch the guide, I had like a serious period where it's FOMO is what it came down to. Okay. So like I would buy a stock, I would make like 50 cents a share. It goes from like 3 to 350. I sold sweet gain on my small account. Right. But then it's like at 4 and I think it's going to go to 5. So I would put like, say I had an initial like 500 shares and I locked in after 50 cents and then it's up 50 cents. And then I would buy another 500 shares thinking it's going to go another. And then meanwhile, all I've done is taken my risk reward I had from that initial trade and flipped it completely upside down. Now I'm buying top of range. And then when like that high day break gets stuffed and it finally does at least pull violently, I give back gains. Like my sweet risk and my sweet entry are just for nothing because I taken that same exact size and mentality and buying it up like 50% higher. That was a big deal for me. So, I mean, I had to put sticky notes up on my computer saying one sticky note said, no double dipping. That stuck with me to now to where like, I don't like double dipping. So like if I've locked in on half my position, all I'm looking to do is close out the rest of that position. I've locked in, I feel great. Maybe I won't make as much as I wanted to off of, you know, whatever the rest of those shares are. It might happen on AUPH. I may be too patient. I don't think that's the case. I think I have a good feeling on what's going on here. I did lock in a little bit more earlier. I locked in 500. I've only got 2,000 shares left. But that's trading. You know what I mean? I find what some people may be able to add to winners really, like Nate Michaud over at Investors Underground. Some of those guys, they call it, I've seen everyone's stuff. Okay. I've studied everyone's stuff. In our space, I've seen everything. Except for the Duxinator. What a name for a guide. Huh?
Oh, really a name, or is that what you're just saying?
No, that's his newest guide's called Duxinator. The Duxinator.
You're not talking about Steve.
I'm talking. Yes.
You are?
Yeah.
Oh.
Who else?
Well,
Who else is Duxinator?
I didn't know he called himself that.
It's a perfect name. It is. But
Also presumptuous.
I've seen everything. Nate, like, he calls it working around a base or, base position where he's selling and he's got a core exactly. Selling from that. I don't do it.
But they have like hundreds of thousands of dollars worth of a position. And that's what they're working with a core. So they're adding like 3,000 shares to like their 50,000 share
But it still
position.
applies to smaller positions too. I mean, it's the same principle, obviously less money, but it is different. When you have a big ass position you want to unwind, long or short, it's different. Even me, I size out on even some smaller positions for the most part. If I've got 4K shares or 5K shares, if I've got 2K shares, sometimes it's 2,000 share sells. It changes. I like to just take profits into strength repeatedly. This, like I said, AUPH right now, kind of uncharted territory for me. I have locked into strength, sick trade, but now it's like patience is either going to come back and bite me in the ass on these last 2,000 shares, and I'm going to, at worst case scenario, give back maybe another 4K of this potential gain, or it works out really well and I can get rid of some in the 20s. You know what I mean? So it's, a lot of, and most of the questions you're asking they're so case-by-case basis. There's really not one answer for anything. Sometimes I work around a core position. Most times I don't. Most times I get what I can get, risking what I can get a sweet average. If it works, it works. And that's one of the things about how I trade. I think it is great for a small account because if you look at a lot of my trades, I'm not taking duck size. I'm not trading, and I can't. I have not been able to scale my strategies long into these positions because of how shitty and sketchy they are. Totally different ballgame. So, low floats, I can't be like loading up 50, 60,000 shares personally. I just can't see how the risk would work there. And I don't want to be caught holding a bag that kind of size. You know what I mean? So it's a little bit different. The parts of the chart I play are so fresh. By the time it gets to Ducks, for the most part, or Bertani, or especially this kid, there's a chart that's developed. It's ran hopefully a day, 2, 3 days, and it sets up for them. They have literally 3 days of price action and levels to go off of. For me, it's a first green day. I've got 1 minute candles to go off of, the first 15 of them, and pre-market. So it's tricky. It's more of an art, I think. It's harder. It's much, much harder. That being said, it's kind of the only way, I think, to grow a small account. You can do it shorting. It's super important to learn about short selling. It's a whole thing. It's like very, very important for your mind to be able to complete the picture, price action. There are three things at play. There's like retail traders going long. We got short sellers, and then we have institutional investors. Got your H.C. Wainwrights in them. So those are kind of the three forces at play. You got to understand all three of them, I think, to be able to go long safely. I don't really get caught in offerings. I don't get caught in a lot of the stuff people get caught in because I'm not there for those days. Generally speaking, not all the time. I've seen really shitty things. I've seen a first green day midday offering, okay, at lunch. I've seen a first green day pre-market and then offering at market open at times. Like they do some really messed up stuff. I think, did AKER do that today? Did you guys see? Okay, AKER, here's a great example.
Oh my God.
Look at this, okay? This is we're talking about this. This is perfect. Because I was so focused on AUPH and because we weren't able to get in here on time, I wasn't looking at this. It's a recent split right here. Here's the split, right? Recent split, pattern I love. I don't personally like splits that are up this high, okay? I like playing splits when they're at like $2, $3. We're going to get into the reasons for that later. Does everyone know what a reverse split is? Well, we might as well start with this. Everyone know what a reverse split is? Don't be shy if you don't. Okay. Reverse split. A company has like 50 million shares outstanding and they're trading at 50 cents. After a certain period of time, NASDAQ will send them a notice saying, we're going to delist you. It's a delisting notice. To stay listed on NASDAQ, you have to stay over $1 pretty much. So they'll say, hey, you got 180 days to fix this situation. At which point the company then has to come up with a plan that they will then present to NASDAQ. Basically what they have to do to get their price over $1, and since the float's so big, they can't naturally get it over $1. So at this point, a PR is not enough to get them over $1. To stay listed, they have to stay over $1 for 10 days, right? Really basic stuff. So this creates a scenario that I love. It creates this whole cycle. This is part of this cycle that we're talking about. AKER just how to do it. So we go here. On 11/25, they did a 1-for-24 reverse split. That means on this day, every 24 shares of this company became 1 share. Okay, they took, if you had 50 shares, now you have 2 shares, right? And if you had 50 shares at 50 cents, now you got 2 shares times 25, whatever it ends up being. $12, whatever it may be. In this case, that's not the case. This price was trading much lower. Post split. So does that make sense? 24, price goes up 24 times, share count divided by 24. So now instead of a 50 million share float, you got like a 2 million share float. All right, now it's a low float. It went from a big ass float to a low float. Higher price though.
NMRD is an example today.
NMRD too?
NMRD did a 1-for-10 reverse split. So
Today?
Today.
Okay.
So yesterday their stock was 50 cents. They did a 1-for-10 reverse split. So now their stock is $5. And the share count went way lower.
So that's what a reverse split is. It doesn't change the market cap, If it's kind of confusing, think about it. Like you have $21 bills, I have a $20 bill, and we just swap them. There's no change in value, just a change in the share count. There is a change in the value of the stock, obviously the price of the stock, but not the value of the stock in terms of market cap. So that's what they do. Then they got to stay there for 10 days. They got to stay over $1 for 10 days, and then NASDAQ says, okay, you can stay. This is a great example of why I don't really like splits. That you will see splits at times. What they do the split. They have 10 days to stay over $1. They'll put a PR out. Now they're a low float. They can run to like $10. They can run to like $15, and then they do their offering.
They're no longer fat.
They're no longer fat. They're skinny. They're going to go. But then there's like a all-you-can-eat buffet just up the street. You know what I mean? And that's where they're trying to get to. That's what it comes down to.
What exactly, financially speaking, for the benefit of the company, what does the offering, how does that help the company?
It puts money in their pocket. Of course, it hurts the shareholders, but when they do that offering, H.C. Wainwright's giving them a bunch of money for new shares. It's not like they're investing in the company, buying up a bunch of outstanding shares of the company. They're getting brand new shares at a discount that they just don't. They're not investors.
So now they're selling them.
They're debt investors.
With Doug's example, it's $10, but they're actually selling them to H.C. Wainwright for $5.
Correct.
And then H.C. Wainwright, are they the ones dumping them
Yeah.
onto the market at 10,
Uh-huh.
taking their $5 gain?
Yep.
And at the same time, they're probably shorting and
So, who knows? Who knows?
I mean,
Whatever.
Don't go down the rabbit hole.
Yeah. Don't go
Well,
too far down there.
but
it could happen. I'm not sitting there thinking like, oh, H.C. Wainwright's shorting this shit. Like, I don't play that game. I don't get too much into that. I don't, it doesn't matter. It does matter. I would love to like be an intern there for like, just be a fly on the wall when they are dumping shares. I talk about this all the time. It's like two dudes like this, like at a computer, like, watch this, Billy. Like, seriously, that's how I'm sure they're like laughing their asses off over there, right to the bank.
So it's basically, is it like a backroom deal that the company finance?
Yeah, they're all together.
And they're saying, look, we'll sell you these at a discount on paper. You are going to be the one to dump them onto the market.
Yeah.
Or
Right. Whatever the language is.
Instant profit.
Yeah.
And especially if it's convertible, if it's Class B shares where it's convertible debt, they borrow $10 million from H.C. Wainwright. They convert some of that debt into shares, and whatever the profit is,
Debt financing.
are we helping pay that debt back
Yes.
to the company?
Yes. Every time you buy a share that's just being put into the market, that's what you're doing. You're buying a new
So they
share.
borrow $10 million, we pay $5 of it back.
Right. they're just like poof, new shares for everybody.
Yeah.
Poof, like you know what I mean? And
And they don't care about us.
they don't care about us, and that's what's so important about the scenario of dilution is the fact that they will dump. Don't kid yourself. There are warrants that are exercisable, whether it's today or tomorrow, and it's there. They will dump eventually.
They don't care that the stock's gapping up 300%. They don't want to hold those gains.
No.
They want it to go right back to where it came from.
It's
They don't
just
care.
numbers. They just churn and burn. Yep.
Because then eventually they get a pipeline.
They don't want to be left holding the bag. Okay.
Right.
They don't want to be, when there are warrants, when there are other stuff where it's there, you can find that out. And short sellers know this, and savvy longs know this. Not longs can know that. Anyone can know this information. So it's one of those things where there are levels that will start meeting natural resistance on the chart too, without dilution. There are times where warrant levels, they don't get to them because they're being shorted and stuff like that. I mean,
So if you know there's warrants exercisable at 4, and let's just say it's starting out at 2, 350 would be an excellent place if you wanted to go long.
exactly.
Yeah.
I always have that mentality.
Below,
Yep.
below the offering or the warrant.
I always have that mentality.
Right.
And you'll see when we start getting into like first green days and stuff, I need room to run. I don't just not trade stocks that have dilution, because then I wouldn't trade at all. Seriously, I wouldn't be long at all ever. Almost everything I touch at some level will have dilution. Maybe from 2 years ago, they're trading at 2 right now, but they have like warrants at 10 from 2 years ago, or so if it does get there, that's cool to me. If that's all I see, I'm like, okay, well, at least dilution wise, fundamentally room to run without some sort of excess supply outside of like organic price action between longs and shorts. That's what I'm looking for. I want to make sure there's no middleman just sitting there throwing shares out. And if there is that, I want to be short there, not long, and I'm not saying I short those levels at all. I'm just saying it makes me much more comfortable to be short and so where there's dilution. It makes sense. The point of short selling is excess supply. You want to be around that excess supply when the time's right.
The cool thing is, so almost every biotech that you get into, you can assume that there's some kind of debt financing. The reason being is because all of these biotech companies, they have to eventually bring a product to the FDA and then bring it to market. But what if that doesn't happen? Then the stock is absolutely worthless. And in the grand scheme of things, if the stock does go bankrupt, debt investors are the first people to be paid back. Equity investors are last. So if you're investing in a biotech, you want to get in as a debt investor, because if the company doesn't make it to market and they do go bankrupt, you get your money back. Whereas if you bought equity, you're the last person. If you're an actual investor in the shares, you're the last person to get your money back if you get your money back.
Right.
So most biotechs are going to have some form of dilution or some plan to dilute, just in the nature of how they're invested in. By the way, Sonny, on the
Yeah, I was about to ask you about it. I was writing out what you were saying, and I'm about to ask you a question.
on a totally different note, your intraday bounce that you like, that we were talking about way earlier this morning, if you look at JNCE, that is the exact the pattern that you want to do on AUPH. That's what I would do almost every time on a first red day, JNCE, where it's had a multiple days of uptrend.
Oh yeah.
But specifically today on the intraday pattern, what I was saying earlier was it cracks red, it bounces back up towards green red, and there's a reason for that to get sold into. It's that first red day.
Yeah.
So I love that intraday bounce pattern, not for AUPH, but that's the exact same pattern on JNCE. And that's what I would take.
Yeah.
So when you ask me if I took it this way, I would say, not AUPH, but in a different circumstance, if it's an OTC, or JNCE is the better example today. That really nice bounce off the lows, I expect that lower high to get sold into. So I can risk green red or 840.
And trades like this is where the first red day I would be more successful at, and I guess I tried to do more, and that's where I went to AUPH and other stocks previously like KRTX.
I remember those. Yeah.
I went into them. I was successful in those, but yesterday I got squeezed. I wasn't successful at it.
So yeah, it's like these intraday patterns, they happen all over the place across the board. It's just what day specifically is it, right? Whereas like Roland is really looking for that bottom on the first green day, not the second, not the third, not that it ran and now it's consolidating, and now it's that first green day that he wants to play price action. For me, it's that first red day that I'm looking for that intraday bounce pattern on an OTC or a stock that has multiple green days, and it's that first time it's red. Then I love it.
With AUPH, it doesn't, of course, it doesn't fit what your criteria for trading. But, and I know you're not interested in that at all. I wanted to ask you a question because if I wasn't here right now, I would be looking to get in, which I kind of feel like I want to get in right now. But I would get in if it bounces a little closer to 17 and risk on off higher day or that pre-market high of 17.
50, call it.
So, yeah, 50. Yeah. So what would you say about that? Of course, it doesn't meet the requirements, but like, would you say that's like a horrible idea? Or I mean, not what I want to say it's a horrible idea, but like, you wouldn't get into that. Oh, I know that.
Yeah, my issue is that it so easily gathers here at VWAP and then breaks past 1750. Like it's not like it's a hard crack right now. This is still like in a tight consolidating range. So in my opinion, it's 50-50 either way, whether it's going to break down or break out. And that's not something I want to put money down on. That's my only issue with it. It's whereas this morning it probably was better than 50-50. Right now it's dead 50-50, whether VWAP holds or it breaks down and then breaks low of day. I don't really know.
I think the best thing for me to do is just to wait to see how it plays out for the rest of the day. And if it does well and continue to hold today, tomorrow, if it's that first red day, that's when I jump in at the right opportunities, right?
Yeah, I mean, for now, like I would treat this chart as a fresh chart and I want it to extend off 15. So maybe if it gets like 30, 45, 50, 60, then I'd get interested. Until then, I don't care. Because I think 15 can support. So if I'm shorting anywhere 16, 17, I just don't think the reward is there. And plus my conviction is 50-50. I don't know if it's going to break down or if it's going to break out. And even if it does break down, I don't know who's going to soak it underneath. So I have no reason for it to fall apart completely.
You're looking for exactly what you want and nothing else matters.
Yeah, ignore everything. CLVS is a good example of what I would want AUPH to do. I just want it to go for like days. Just into a ridiculous land, in which case, once you're in euphoria, that's when a lower high really works. Because longs have a reason to sell and shorts have a reason to pile on. And that's a time where you're going to see panic, stop losses going off, etc.
Yeah, that's a nice first red day. That's great.
Yeah, I didn't even see it. Wasn't even on my radar.
So let's check AKER out real quick just to finish this example. Reverse split. The whole reason I don't like trading splits, even when a PR comes out, if it's trading at like $5, $6, something like that, I don't like the fact that my floor is $1. Does that make sense? The whole scenario is based off a $1 floor. Now, I'm not necessarily risking $1, but in my mind, that's the base. That's like home base. So when a stock's trading and when a reverse split gets to 2 or 3, something like that, which hasn't happened as much as they used to do splits and fade to 1. Okay. This used to be the pattern. They used to do splits and fade to 1. I could load up at like $1.20, knowing that they got to keep it above $1 and PRs would magically appear like often. And I would just have shares at like, you know, and not only that, but they would be trading at $1.05, $1.10, and the PR would come out and they wouldn't run like it wouldn't be up 100% right away. You had time to trade it like at the open and stuff like that. So I was able to load up like 10 or 15, 20K shares at times in the low ones and sell it in the 2s and make 10 or 20K like that, you know, because they would go to 2, 3, like their low floats trading at $1, you know what I mean? That was the pattern. I put that pattern in my guide as one of my strategies, and I still work around this a lot. It's a very important part of like NASDAQs. But the pattern kind of changed. Like people started loading them up instead. So instead of fading to 1, you know, I mean, generally what would happen is they're illiquid. They fade to $1 on low volume. Now there are people who are like buying, who are probably sitting in AKER already. Okay. Including people like me. I have been at times now loading up some of these splits, not the ones in the 5s and 6s and 4s and 7s and 10s. Because of this, I know what their floor is. They have to know they did an offering that they could probably hold $1 still. It's been 7 days or whatever. They only got a couple more days to keep it over $1. Plus, there are other things at play when you're talking about the splits, and there are other reasons that companies get delisted. Minimum shareholder equity being one of them. Doing a split in and of itself will not solve a shareholder equity problem. If you don't know what that is, you can do a quick Google search. It's very basic, fundamental. Shareholder equity has to be at least 2.5 million. So if they do a split, like we said, it doesn't change the market cap or the cash in their pocket or anything like that. So it's not gonna affect that shareholder equity number. To affect that number, they do need cash. So if they're deficient on the shareholder equity, they're definitely going to be doing an offering of sorts. They have to. So I actually like that scenario too. When that's the situation, but that's where you have to be careful. Maybe they went under $1 and they have to get back over $1 and they need shareholder equity. And maybe they already have an offering in place and they can do a split, like a big ass split, get it to 10 and then just lay into it. Seen that too. AKER is a great example though. If you're playing the strategy from the guide, it used to be buy the PR day. I never used to, I could have in retrospect, but I wasn't loading up on splits. I was just trading them when the PR came out. PR would come out, it would be at like $1.30. I'd still have 30 cents risk in my head. And I would still be taking 10K shares there because I'm thinking I'd risk the 3K. I'm going to make 10, 15 on this. Okay. So now they do a split. Look at AKER. Okay. They did their split. The lowest they got to 5 and then started moving up. Okay. This is what I've been seeing lately with the splits is this pattern. There's this chick on YouTube, just popped out of nowhere who's freely giving away that strategy. I'm 99.9% sure she bought my guide. But I can't find her real name. If I could find her name, I could see. And I'm not trying to shut her down. I don't care. Maybe she didn't. Pretty sure she did. It her little video on that came out in March. It's like how to find the runners before everybody else or something. It's got a ton of views. It does, but whatever. So it's out there now. That strategy is out there. And there are people who now just load up when they dip a little bit. I don't do that because I know what the actual big picture is, which is this. AKER today, 6th day, 7th day, they put out a PR this morning and we're gapping up initially. They got to be the biggest loser now. Hold on. They are. Okay. AKER. Where'd you go? Perfect example. 8:45. This, first of all, S1 yesterday. Okay. First red flag. First sign to me that something would be up. Not to say that it would make me not trade it necessarily. And S1 is a registration statement for stocks. Okay. When these companies do want to dump stocks and dilute, it has to be legal. They can't just say here's 1 billion shares, it has to be registered with the SEC. In other words, the stockholders have to approve, whatever else. So yesterday they got this S1A. We'll click on it. Registration statement. And anytime you see -A, it's an amendment. So it's an amendment to their S1. All this says is they have all of these things that they can do. Okay. There's no price on them. There's not much there, but that's a red flag to me right off the bat. They're laying out saying, hey, we can do this. Okay. This is legal. These are the ways we can do it. This was just yesterday. Okay. And then this morning, 8:45 a.m. Here's the pump, right? Perfect reverse split pump scenario. At times, this would go to 15 or 20 bucks or 10 bucks or $8 or something. It would run, okay? In fact, it probably would have ran today, okay? It kind of hit my radar earlier. I saw it gapping up, but I was so focused on what I was in. AKER, continued strategic review. And anytime I see something like that, very pumpy. It's not a catalyst. I like strategic review. That's okay, we're going to fuck all of you soon. That's the way I see it. They hired some expert on how to stay alive whatever. Explore leveraging its 30 years of laboratory options to enter into the hemp and minor cannabinoid processing industry. AKER, were they at the conference? Oh God, that's even worse. Okay, so these guys have done this in the past. This is not the first time they've done this. During my big conference, November 2017, the one in Scottsdale. Was anyone at that one? You two were there. What's that? No, I had a pretty big one for the guide release back in the day. It's like 150 people there. Same scenario. And here it is, right? Where is it? It's right here. It's this day. They did something similar. They did a split. 9 days into the split, they became a weed stock. In other words, they're like, we're getting into the weed industry, right? This was in 2017 and 2018, I'm sorry. Was it? Yeah, 2018, sorry. November 2018. Same scenario. They did a split. They did a pump. Last time was the same news pretty much too. Like, we're going to get into the weed stock. That's what they said today. Not great news. Not something I would, be amped on. And then let's just continue on. So you may think, okay, let's get to let me get to the 1 minute chart first of all, so you can see what happened this morning. Look at that. So it did go to 8. It's not even like it didn't. Look at that. Okay. It was at 550. It was kind of gapping down. They put out a PR at 8:45 this morning, right here. See this volume? Look what it did. It went from 5 to 8 pre-market. This is what these have been doing as well, and I can't trade that, okay? This is what the split pattern has looked like recently for months and months. They've split, they fade like a buck or two to like 4 or 5, then they grind up, and then they when the PR comes out, they're immediately up 100%. I can't trade it, okay? So it screwed up the pattern for me. When this doesn't happen, which there are times where it doesn't, and the market conditions are right, like I can still trade these at times, but it's just way different, man. It's way different. And it's a good lesson to me when I find something so golden not to share it with anybody, or, maybe a very select few, but it's just one of those things. So AKER, boom, and then 8:45, and then at 9:21 and 9:25, they have a public offering and they price it. $8 million public offering, $4 per unit. Okay. So how fucked up is that? Like, how fucked up is that? $4 per unit. It was at $8. And they're like, oh yeah, by the way, we also did an offering and it's at $4. So they put out a PR and it ran to 8. And then they, so like, that's how sketchy this shit is. All right. That's why I don't trade this stuff. I don't trade these splits that are up a ton, because this has happened multiple times now, like many times this year. The higher price splits, they just like put an offering out because they know they were just at 8 when they put that offering out. They should be able to stay over a buck.
They did all that 8. The shares, they got the shares at $4.
Yes. Well, they probably weren't even able to dump. This is like what happens is like anyone who's chasing this, anyone who's in it just sells immediately because they're like, holy shit, like.
It's the company saying we think we're worth $4 a share.
Exactly. And we just sold a bunch. Like, think about it. Some of these things go to 20 and 30 and people start buying it at like 15 and 16, 17. And then they find out, oh my God, they just gave a whole shit ton of them to these guys for like $5. You know what I mean? Like
so the offering is, who is the offering to? Everyone or
it depends.
The finance?
They have different kinds. It depends what they're doing.
So if it's at 8 and they're offering at 4, no matter who's buying it at 4, that's incentive for people to pile in at 4. And that's just them making money and diluting the other shareholders.
Yeah.
And bagging all the chasers.
Yeah, but people this is what happens with offerings too. The offering is such a trigger word in penny stock world. Like, noobs know what offering is for the most part. Like, if you've been trading at all, if you go on StockTwits, it's like a big thing. People will be like, they're going to have an offering, like whatever. I don't recommend going on StockTwits. It's like the dumbest place. But I go there for amusement sometimes. That's all it's good for. It's a bunch of people saying to the moon, or it's a bunch of people saying like, this is a piece of shit, like, you know, bears and bulls and a bunch of garbage. But this is a perfect example again. They did it again. This happened last time. They said we're a wheat stock. They ran like 100% and then got destroyed and did an offering. So TNXP, which I ended up shorting live on a first green day when I used to do that. Yeah, that same deal. They had a reverse split. They did their pump. I ended up shorting it, and they did a midday offering. So you got to be really careful. You know, this is the most perfect illustration I can give to you guys of a lot of things that happen here. They did a reverse split. It's like 7 days later, they put out a PR. It spiked the stock 100% pre-market, and then they did an offering. This is the entire cycle I'm looking for. This is exactly what I'm looking for. Like, it doesn't have to just be splits. It can happen at other times in the charts, but generally, this is what I'm looking for. That's crazy. You know, had they not put the offering out, they may have opened up at like maybe 6 or something like that, and still been a gap up. It would have been probably the only thing in play today. You know, there's not much in play. It's a bunch of garbage on my scan. Here's my scan right now. Biggest gainer is this 24-cent stock. It's up 30% on 600,000 in volume. BNGO we already looked at. I can tell you, like, outside of AUPH, and I say this a lot during my webinars and stuff because it's the truth. If not for being at a boot camp, my computer would be closed and I would not be trading right now. I'd be working, or if everything's taken care of, I would be golfing. And that's one of the beauties of this job. It's one of the reasons I love trading, especially in Phoenix. We start at 6:30, 7:30 right now, but most of the time 6:30. If I do my job right, I'm done by 8:30. And then we'll frame it like this. I only trade the first 2 and last 2 hours of the day. I don't trade midday, anything between anymore, because of experience and tracking. It's I found I was able to eliminate a large percentage of my losses strictly by cutting out midday, because my data, my trades showed me that. It's really simple. 2017 through parts of 2018, like a majority of my losses were just midday trades. And just by cutting that out, it took like a large percentage of my losses away, which we'll get into tracking too. But there's a lot of stuff to get into.
So I've got a question for you. I know it's shocking.
Yeah.
Question.
No, sorry.
If it's trading, it was trading at 4.
They're good questions though, and they're relevant. I mean,
now it's at 8. That raise in stock price, that doesn't benefit the company because they've already sold those shares. So now whatever it does,
it still benefits the company though.
Does it?
Yeah, I mean, it's a market cap game too. You know what I mean? Like, the higher their stock price, the better. The problem is like I said, like payday loans, maybe they get a little bit of cash now, but what do they owe? Like in 3 months, what's the interest on that cash that they just put in their pocket? So, I mean, and then what happens when there's no more cash in a year and now they're trading at like 30 cents and their float's too big to move again? You know, it's a perpetual thing. And some of the worst stocks, which we'll see, I mean, we can go through a few charts just to do it. But like some of these stocks, when they get into toxic, it's called like toxic financing, death spiral financing. It's truly what it is. It's like these payday loans that you can never pay back and that just compound. Look at this chart.
That's a year.
This is a year. This is going back to the 2 years, 2018. It says it was trading at $70,000. It's not. They've done a bunch of splits. Look at this. 12 million. It says they were trading at in 2007. And this is just the stock price after each split being multiplied by whatever that number is, and then compounded on the last split. You know what I mean? So these numbers, that's why these numbers look so big. These charts change because of this reverse split thing that we're talking about. Like yes, they're trading at 70 cents. But they were also, and it says they were trading at $4 in November, but back then they were also trading under 70 cents. They've just done a split since then. Yes. Split. Split. And on this one, they ran from like 3 to 9 that day. If any of you were trading back on July 8th of this year, they did a split. They had like one big ass run day, squeezed a bunch of people. Split right here. I mean, this is, you know, they did like 4 splits this year or whatever. And then it just goes on and on and on. So like here's a perfect example of death spiral financing. Yes, it can run for like 2 days at a time. You have to know what that pocket is. You know what I'm saying? And it's a good example. There are like, this is the shittiest stock ever. On this day, it was the biggest face ripping stock that day. It tore shorts apart. Tim Grittani went long at like $7 or something and made a bunch of money. $6. I forget what his buy was. I was like, wow, I would never do that. But he made a shit ton of money off of it. Because I mean, he understands scenarios like that. They can just squeeze on those days. Outside of that, I don't want any part of anything, you know, like any of these stocks. This process of trying to find that little pocket of time where they can run is what you have to develop if you're trying to do this. Like that's the very first thing. You have to figure out what can and what can't run. Most of the shit can't run because most of the shit's stuck in this part of the cycle. Okay, that's all. They're cyclical. The share counts change. The floats change. The fundamentals change. That's why you have to look at fundamentals, period. If not, it's just a shot in the dice. Oh, it's a former runner. Fuck off. That used to be my thoughts, though. I used to be like, oh, it's a former runner, you know, and that was like my shit. I'm like, oh, it's a former runner, and I want to aggressively trade it. Not understanding what part of the cycle. Yeah, it's a former runner. Totally different stock now. It's not that skinny. It's something different.
So they were trading today. They do the offering and it tanks it to half the price. How is that benefiting the company? Because that's the gap in my mind. I'm not getting that.
Because they're getting paid no matter what. They're just literally making new shares, giving it to them. They're making their money.
50% of something better than 100% nothing.
50% of HC Wainwright's better than 100% of retail. You know what I'm saying? Of that HC Wainwright money. They can't, you know, like if we're buying and the price of their stock goes up, they can't just like take money necessarily. Yes, their books look better, but it's not just like cash. Do you see what I'm saying? There's a difference.
So it's just like the IPO, this is just the secondary offer.
They need cash is what they need.
Okay.
For any company to continue forward, they need cash. You need operating cash. That's the thing. It's not that they don't give a shit about their market cap right now. They're just literally trying to survive as a company. And to survive as a company, you need cash. If you have no revenues, if you have like one product that you sell like 10, you know, of whatever a year, and you have no revenue, you need cash. If you're biotech, getting drugs to market super, super expensive.
So if they do the offering at 4, what do they sell them to HC Wainwright? We don't know that.
No, I mean, that's all in the prospectus. It's all there. And this is what's cool. These offerings, they're complicated at times. The more you learn about it, the easier it gets. But it's, for the most part, it's all there for you to read. So it's not like they are kind of hiding it. They're not like, hey, everybody, but they have to, by law, to take certain steps that allows you as an investor to see what the fuck they're doing. And it's always terrible. I don't know, I'm cussing so much today. I get angry when I talk about it because like everyone's trading and no one knows. Like a lot of people know, don't get me wrong. But most people can't get past this step, okay? Most people will never go through the filings because it's fucking boring and it's hard. You know what I'm saying? Yes, it's hard. Trading's hard, but it's much harder if you don't learn this stuff. That filled in such a big gray area for me. It painted the picture of what I trade. You don't know what you're trading till you're able to, you know, get through that stuff. That's a fact. Even Grittani, he's like up in the fundamentals now, you know, and he's the trade the ticker guy. He is. He's the trade the ticker guy. They're all pieces of shit, which he's more right than people who are just trading the ticker long. I promise you that. You can't just trade the ticker long. It's impossible, in my opinion. 2017 was crazy. When I built my account the most, still my biggest year to date was 2017. Part of it was naivety, in my opinion. Part of that was naivety. Part of it was we had 5 or 6 sectors that went crazy. Bitcoin, weed, like Chinese stocks, shippers, and like we had multiple sectors that kept lighting up. And I figured out how to take advantage of that scenario. And that is what grew my account exponentially, was being able to take advantage of certain scenarios that I found.
If you only traded OTC stocks while they're hot, you'd be phenomenally profitable.
Yeah.
Which is what you do every other day.
Yeah, it's true. It's true. 2017, I was all up in the OTCs. I was taking
So good.
Bitcoin OTCs from like 5 cents to $1, 5 cents to like, 30 cents. And I'd have hundreds of thousands of
This
shares.
is amazing.
It was crazy. It was like Candyland.
It was.
Kodak, I had a couple thousand shares and overnight it went $10, like just on Bitcoin news. You know what I mean? So, I mean, that will happen again. There will be in the future. It hasn't been like that since then. And I can tell you, if I put myself now with my knowledge of what these things are back in 2017, I may not have been able to capitalize like that. That's the truth.
Or you're just all in Kodak.
Yeah, where I was gunslinging these things and crushing. It wasn't. I haven't been able to replicate that because the markets haven't been that like that. But they will be eventually. And there are pockets where it's like, yep, I know what this is because I've traded this before and I know how this works. So that's why experience is super important. Filings are super important.
Patience.
Like all these things come together to form this picture. And if any of it's missing, we're going to go over process when we get back. Something I do at each boot camp, which people love because I just map out my mind, like from blank to ticker to like trade or not trade. What happens? There's a lot of shit that happens. I didn't realize it. I mean, I did when I made the guide. I'm like, wow, I do a lot of things. Like I have to tell everyone what I do. What did I do? That was a really cool moment for me to have to quantify what the fuck I'm thinking every day. So, but with this process now, I try to give that to you, like just a quick map of where my mind goes before every trade, almost. Because sometimes I'm exactly do the things you guys do, like chase, get FOMO, like not cut on time. There are a lot of things that I do just like anyone. Difference is I'm aware when those things are happening, where for a lot of people, it's just like, you don't know what's happening. You don't know what you're doing, which you're going to have to go through that anyways. You know what I mean? You're going to have to go through a lot of shit to get to what is going to make you successful. I just want to paint a big picture of what you're trading. And as long as you know that, if you're trying to go long, you're going to be in a better position than most people are going to be when they're starting. It took me a long time to figure it out. And I went through everything from everyone, from free information to paid information. Spent a lot of money on stuff. I went through everything. But you still have to find your own way. That's the thing. It's so individual. It took Huddy like years and years of like just being patient pretty much. You know what I mean? And experimenting and banging your head up against the wall. Partially because we're like so habitual as people. Just like get your scan and like, oh my God, it's up and you're like in. You know what I mean? That was pretty much my process for so long. It's like, it's spiking, I'm in. How do I get in it? I need to get in.
I'm in. What do I do now?
I'm in. It's going down, I'm out. And then it rips. Because you got it, like you're chasing it, then it pulled back. Or like, just have no clue how it works. So
it took me 3 years to find where I settled. And then it wasn't until I found where I settled, the next year was the most important. So 3 going on 4 was the most important. That's where I learned a lot. So it takes 3 years just to find, for me, where I settled. And that was trying everything every day and racking my head against the wall and following every single guru and trying to mimic it all. And it's not all mimicable. That's a word.
yeah, no, I like it. Trading's tough though. It's tough. But like, if you know certain things, it's way easier. I promise you that. The people who do go through this and start getting into the fundamentals, start focusing on better stocks naturally. It's not rocket science. That's what happened to me. The second I started, okay, I got to find out what the worst stocks are. I've said this to many people in the past as well. It's like a field full of landmines that are buried and you have to get across. Well, you're going to die. Definitely, right? You're definitely going to die. It's impossible without like extreme amounts of luck. But if you could just like literally have like see where they are and you could just walk around all the fucking landmines, anyone could get through that landmine field. You know what I mean? That's kind of what it is to me. That's how when I look at my scan and there's like 30 stocks there, that's what it is to me. It's like, what's that game? Minesweeper? It's Minesweeper? It's like Minesweeper kind of, where you're literally trimming out edges, making sure you're not stepping on the bombs or whatever. Is that how it works? Whatever. It's something like that, where you have to eliminate so many, you have to eliminate that we're trading all crappy stocks. You got to get rid of the worst ones in terms of dilution. All right. That's why float size does matter. Float size is important. All of the things, like the fundamentals, do matter. All of that stuff matters. For me, if you're trying to do what I do, that's what I'm looking for. I know on that day where there is range and I'm taking the entries that I take, which I'll show you as well. On first green days with certain type of mentality taking entries, I get sweet risk reward. And hopefully when they work out, I'm in the biggest runner of the day at the dead bottom. That's been always kind of my goal. Be exactly on the opposite side of where like Dux is going to be and Gritani. And then if there HC Wainwright's lurking around or someone else is there, definitely don't be there for that. That's the goal. Make sure that like what I'm doing abides by those principles in terms of longs. As a rule of thumb, sometimes I trade the third day. Sometimes, I traded BIMI last week, kind of scalped it in a part of the chart I hate. Okay. And that's just kind of me being human. Truth is, I've been on a kind of a crappy streak, like since my brother died in October. Since then, I've had a really hard time trading. Like it's been understandably tough. Trading so hard as it is psychologically. I don't like to trade if I'm sick. Like I've had bad losses just because I'm sick and not thinking right. And then next thing you know, you're like down and you're like sick, and I'm like, oh, I'm so sick and I'm losing. Like it's not a cool thing. So I don't like to trade when I'm sick. I don't like to trade unless my mind is clear because everything's at stake to me. I don't like losing $1. I hate it. Like I don't, it's now that doesn't affect my trading. Like winning and losing trading doesn't matter to me. Okay. Losing because it's of something under my control bothers me. And that's what my whole process is revolved around, basically two things: eliminating my personal mistakes and my psychological mistakes on a personal level through tracking and being conscious of that. And then eliminating all the shittiest stocks by going through fundamentals, understanding these daily charts, understanding the dilution that's taking place. Which, like when we get into the process thing, you'll see exactly what I go through in my head. But that's kind of the gist of it. If I can eliminate all my flaws, there are times where you have a setup, it's a great setup, and it doesn't work. It happens often, it happens a lot. Or you just screw it up, maybe just get shaken out, but it was still your plan to cut and you stuck to your plan and then it ripped, whatever. I have no problem with that. I'll lose 10 trades in a row and be okay. As long as had my plan, I stuck to it, it was logical. It's if I start chasing or if I'm like, start adding, or if I start doing things that go against my personal process, that's what I want to eliminate. If it's like a FOMO trade, I want to make sure that I know that and be better on the next trade. What's that? Yeah, I think, no, I think, 10, I don't think so. 10? No, but like 7 or 8, I'm pretty sure 8 might be the high. I don't really care. I don't even think about it like that. Honestly, I'm not like, oh shit, I've lost 10 in a row. Like that will fuck you up. I'm thinking the next trade. I'm always thinking the next trade, using my data to make sure I'm not continuing on to some sort of weird path where I'm making mistakes. So you have to be super conscious of like your track record and what you've been doing, but you can't let that, like some people get paralyzed by it. Like their confidence gets so shaken they can't place a trade. And that can be just as dangerous as not, the opposite. So for me, you never want to get too down on yourself. Trading sucks at times. You want to know if you've been too aggressive in a market you shouldn't be. You want to know if you're taking like massive size on a setup you've never tried. You want to know certain things like that. That's what I try to be conscious of. If it's just a trade, a new setup I'm working on, for example, that can be frustrating because like it's a new setup. You don't know how it works. You don't know how you're going to react to it or whatever it may be. So new setups, you got to be patient with. I understand that. Small size. But you also need a body of data. You can't lose a trade once and say, oh, that setup sucks. Especially once you realize how cyclical the setups are too. You know, there are times where, like right now, breakouts are kind of working. I hate breakouts. My least favorite strategy. Yet the number one long strategy that's taught. The only one that you'll really see, like if you Google it or buy the dip, whatever that means. You know what I mean? What I do has purpose behind it. And there's like an exact reason for it. And it's because I've been pinholed into it through my data and tracking and the way and through going through fundamentals. Those two things narrowed me into, and sometimes I feel a little too pigeonholed. But I'd rather be that way. And that's how you should be, especially if you're under PDT. You know what I mean? You want to start narrowing it down. If you start, you'll know, like looking back in retrospect, so many of the stocks I traded seem so great, and maybe I'd be up and then they just get destroyed. And you're like, what the hell? And it seems random and penny stocks suck, but it's not. It's probably HC Wainwright. You know what I mean? Or you were just buying in the wrong area. It might've been Tim Grattani or like some of the other big ass players in that space.
You know what happened to me a lot, I bet you everybody in this room can relate to this. I was buying as I was chasing, and I would buy dead top.
Yeah.
And then I would sell to cut my loss dead bottom.
Yeah. Oh yeah. I've done that.
Exactly.
Oh yeah.
90 degrees out of where I should have been.
I've done that. I don't do it anymore.
I did it so much that I got every time on 100% of the time. And then the one time that I
it's not funny, but it's funny.
I'm not going to buy because I'd set that one out and then boom, it'd be going like rocket. So I knew at that point, I don't know what I'm doing.
Okay, so that is human nature, man. And this is why trading's so freaking tough, because our nature is green's good, it's going up is good. Get in when it's good. That makes sense, right? Like it's going up, I'm gonna get in. It's gonna keep going up.
Pretty good.
It's gonna be good.
I think the main thing is to have a strategy, and then within that strategy.
And see that exactly. And that's
but if you're new, here's what I'll tell you. If you're new, here's what I'll tell you is that all your nature, human nature, everything your body and your brain is designed to do is bad for trading. It's all fucked up. I've changed so much as a person through becoming a profit. I found like I was becoming profitable at trading and my life was changing. Not because of the money. Like I have not changed because of the money. Like life's easier in terms of bills and stuff like that. But I didn't like buy shit. I bought like some clubs and a house for my family, which is sick. But like, you know, it hasn't changed me like that. It has changed me like I'm more patient and I look for more value all the time. You know, I used to be like, just spend money. Now I need a reason to I need it cheaper than whatever everyone else is getting it for. I'm serious. That's how, I mean, throughout everything, that's how I feel now. That came from trading though, because you to become profitable, you have to go against your nature. We're just wired as humans a certain way, and we're all kind of wired the same, but that doesn't work in trading. None of those feelings you get when you trade are good for you. I promise. It took me a long time to understand that. I'm like, oh, I get it. Yeah. Psychology, blah, blah, blah. No, it's true. I'm totally rewired. When I look at a chart, that doesn't happen to me anymore. When it's going green, I'm like, fuck, it's gone. Peace. Like, higher the better. He'll have a good day, like whenever it's done. That's how I feel. But I mean, that's my mentality because I've had to go there. Everything I do has been counterintuitive. It's really weird. Everything I do, everything I would thought was right is wrong. I mean, to a certain extent, that's why 90% lose, because 90% won't change. They won't change from being a chaser and FOMO trader, and they let their psychology get the best of them. I can tell you what, go through the fundamentals more and more and more, and then say why you probably make more at your job than this company has ever made in revenue. Okay. Like you will have more cash in your bank at times than some of these companies have who are just in shit tons of debt. You know what I mean? And then when you put it that way, you're like, now I'm chasing them. So that you're just giving them money. You know what I mean? My mentality is I can take advantage of this little scenario and this little niche that I trade. That's why I love it. That's why I kind of have been pigeonholed to it, because I love it. I love having whys. I don't like just trading price action, though it's very extremely important to trade the price action. That's all that really matters in the end. But you can, man, I put price action together with like the big picture, which you always need to think about, of this particular stock. What are they doing? Why are they doing it? Can it run? Can it not run? And it just like, it simplifies so much stuff for longs. I look at my scans in the morning. At times it's already shit. I already know they're dilutive and I can ignore, and I'll see like I only have to do research in like 2 or 3 of them just from looking at my scan. And that comes from experience. And then looking at daily charts and seeing it so many times, like I can just see offerings on daily charts now. It's not that hard. Generally, like anything that gaps down big, and then if you look at the chart and it's like trying to get back up, there's a gap. There's an offering there. There's something bad there. That's why there's that resistance there, because there's excess supply. Everyone knows it, whatever. So everything I do is designed towards fixing my psychology. And I was psychologically like everybody else. By nature, I'm a gambler. You know, I've had a gambling problem in the past, which is like, my wife was not too keen on me trading at first. She's like, this doesn't sound good. Like, you remember blackjack? I'm like, I remember blackjack, but it's different. And it is different if you can make it different, you know. If not, it's just the same. It could be worse than blackjack if you don't know what you're doing.
I don't have a gambling mentality.
Which is fine too.
Which has caused me to struggle with pulling the trigger.
That's exactly what I hear all the time.
Yeah.
If you don't have that, here's what I'll say. A lot of the successful traders I know have gambling mentality. Somewhere in them, it's kind of a common thread where they're like down to roll the dice. Because at the end of the day, you do have to roll the dice over and over and over again, which is what we do. Every time you're in, you're gambling.
It's a game of odds.
But there you can find edge, and real edge and a real process. You can find and you can cut. You're in control of your losses. One of the most important aspects. You know, any casino game, at best you might get like a point. You know, maybe a 1% advantage in blackjack at best. At times, it's not like that here. And when you bet there, you're either winning or losing that money, and it's gone. With here, you get to control exactly what you feel the reward may be and what the risk should be. So I am always playing scenarios where it's like 1 to 5, 1 to 7. If I lose, okay, I'll lose this much. If I win, I'm going to make 5 times that much. With that ratio, and then my process, the way I go about it, eliminating the shitty stocks, making sure I'm not chasing, very basic rules. What I do is basic. The more I talk about it to people, very basic, very hard to implement, because psychologically we're wired so shittily. That's why. Women are wired better than us, than the men, I think. Some of them. Some are fucking crazy.
You want to know what my daughter did one day? She's never done stocks. She doesn't trade. She's 21 years old. But when she was a little bitty, there was a show that came on about couponing. So she got big time into couponing. And looking for the bargains, looking for the sales. The only reason I'm sharing this is because it resonated with me, and I think it might help everybody here. She's standing over my shoulder one day, and she said, "How you doing, Dad? Doing any good?" And I said, "Well, I don't know." I said, "This one's running pretty good." And this is the mindset that's exactly backwards. I said, "This one's running pretty good. I'm going to see what it does." She said, "You know what you ought to do, Dad? Wait for that to come back down and then buy it."
Right. Yeah, totally.
But, I mean, it's like,
you should, right? It's so.
For her, just looking at it first time, well, I'd wait for that to come back down. That's her couponing, bargain hunting mind.
Yeah.
And it flipped a switch in my mind.
I mean, it's like if you wanted to like buy a house and you're just like lined up with like 1,000 people and everyone's just bidding each other up, like same value, like shitty house. Like, I don't know why you guys are all standing out there trying to, you know, that's pretty much, you're like that guy in line trying to like, it makes no sense whatsoever to like chase. But we are just wired that way. Like, get in, got to get in. Like if you can get that out, you'll be better off than most people right off the bat. Like I said, my whole thing came about from Grittani, like realizing like, yeah, I don't want to be anywhere near him. Okay. Him, I mean, like these people. It made sense to me, you know? And the more you get into the fundamentals, the more it makes sense. So it's one of those things where like I've been saying filings are important for a long time, but the more I get into them, the more important they become. Period. And because the charts, they manifest, like that happens. And the fundamental things that you are seeing manifest on the chart. That's what's important to me. So the chart, very super, you know, super, super important. Like you're trading, I'm still on a 1 minute chart trading at times, 5 minute chart. But I want big picture first, and then I go down to the minutia and then get into the trade itself, which is different. That's a whole nother ballgame. I can lead you to the pond and then like, but if you can't swim, you can't swim. You know what I mean? You'll have to learn to swim there. We'll get into some other stuff about like performance aspect, because 2 different games. You can narrow down the plays. I can give you the one play every day. Can't trade it still if you don't know what you're doing with it. If you don't know how to get executed. If you have issues like pulling the trigger but that'll come with, you know, that comes with confidence as well. Like once you're able to start narrowing down the shitty ones, you're not going to have as many shitty trades. You're not going to have as many of those scenarios where you're chasing shit into like dilutive areas. So what seemed random and like a trade that didn't work, if you had just done a couple additional steps, you would never have been in that trade in the first place. And the one that was running that you missed because all that shit wasn't there, that's where you would have been focusing on. Whether or not you would have nailed it, that's a different game, but at least your focus is in the correct place. That's the most important part about this, is like making sure your focus gets to the right areas, and then fine-tuning your trading, you know, the actual trading. But the first step is to get to stocks that can run if you're trying to be long, and avoiding the worst ones. If you're under PDT, you got like 3 trades a week, and you use one of them on a scenario like that, that's a huge waste of time and capital. It's a huge waste of your day trade if you are in a dilutive stock and you get stopped out because you're like holding in waiting for it to come back, but it's never going to. So, I mean, and I've been there, you know, when I had my smaller account, there were some losses where I'm like, shit, I don't want to sell this. And you just sit there for like a week and it doesn't do anything. And then it kind of just keeps going down, and then you cut it and then the pump comes out and maybe you would have broken even, you know, like I've been in that before many times. So you know, pretty much anything you guys go through, I've been through it. Because I tried everything. I've tried everything, tried every strategy out there, come up with a lot of my own strategies, and you will too, you know. But like if you listen to what I'm saying, I promise you'll avoid a lot of heartache that I went through. That's the only reason I teach. The only reason I teach at all, it's because I have stuff that I came across through trading and learning that wasn't taught to me in a very concise fashion. Like, this is what you should look for in NASDAQs. This is what's dangerous. This is why. Screw all that other stuff. If you can focus on these things, I was banging my head. I was the guy doing what you were doing. I was the guy playing all sorts of weird things. Different market in 2017. You could chase the shit out of stuff in 2017 if it was like a hot sector. Granted, I didn't really do that then. I figured out the chasing thing when I watched Trading Tickers, which was beginning at end of 2016. That's what I was like, holy shit. That sent me onto a path of dip buying and finding bottoms. And then the fundamentals set me, like, it's all pigeonholed me into like the most volatile runners. I find them every day. Whether or not I trade it is another thing, because it may not be there, or the markets may not be correct for that. So, or I just miss my entry, you know?
Do you think that the patterns, you said that the chart is manifest in what the filings are showing. So patterns alone, are they worth anything in the
Yeah. It's important. The technical analysis, very important. I'm not saying it's not. Super. It's a huge part. I mean, it's a very, very important thing. There are differing levels of, you know, technical analysis in terms of competency and like, but technical analysis is a very objective thing still. It's not like there's not like one rule. I don't play like 3 candlestick patterns and all the stuff you would read in a book about doji, morning stars, and like cup and handles. I don't give a shit. I'm looking at price levels, price action. This is the only, what is this? This is not an indicator I normally have up, so I don't know why it's up. Really weird. All I use is VWAP. That's it. This is the only line on any of my charts, and I don't use it for that much. I don't risk it. I don't, it's just another little indicator there, but technical analysis is very important for sure. Fundamental analysis is extremely important. Being patient is very, every little piece of it's like, you know, baking a cake. And if you're missing like the baking soda, it's not going to be a good cake. Maybe, I don't know if that's in cake, but I'd imagine. No, but I mean, it's, you know, it's just that so many things. We could talk risk reward for 2 straight days. I could go all day long on risk reward for 2 days. Any single little topic, we could talk about FOMO for 2 days. I can do that. There's so much involved. There's so many things. So it's extremely complicated and it's extremely simple. That's how complicated it is.
It's so complicated, it's simple.
Yeah, you should buy when it's lower, bro. Right?
Yeah.
Yeah, I
That's
mean,
exactly what I
a
was-
5-year-old would tell you that. A 5-year-old would be like, why you do it? Like, wait for it to come back down. Here's the key. Here's the thing. You're trying to improve risk reward. The higher it, anytime it's going up, your risk reward is drastically getting worse. Every time. That's how I look at it. A stock going up, I'm like up. Like if it gets beyond whatever I am comfortable with, I don't buy more. That's a big difference between the guy who will buy more 20 cents higher because he has to be in, or I'm just going to wait, or I'm going to end up with whatever size I have. And then if my risk is breached, okay, it's not a big deal. It's those chases that get you. Yeah.
I don't know if you said this already, but I'm trying to figure out, like, what is your main strategy? Like Sykes has big buying.
Dip buying in and of itself is not a strategy. I get it. But I mean, and here's the thing, like I'm playing first green days and I have very specific entries on them. For me, it's more, I have very specific ideas on entry. Okay. And since I'm playing first green day, I can't always say this is what this strategy is. I mean, I've had to name them for teaching purposes, like gap and crap reversal. I heard of the gap and crap, but I never heard anyone talk about the reversal and finding an entry there. That's like one of my main entries across all strategy. So if it's a reverse split pump, if it, whatever it may be, any kind of first green day, it's more based on getting a specific entry. You know what I mean? Yeah. Yep. Entry and risk. That's it. And then like taking everything else into account, big picture wise, like, which you'll see exactly what I'm talking about.
But I think first green day, reverse gap and crab. He's
That's-
looking for a first green day and then the price action.
You know what?
I'm
And
looking for a name.
to simplify it completely.
Like you or
Oh, that's me. Yeah, simplify it. I'm looking for first green days and I play reverse gap and craps or the first pullback. It's really that simple. It's just like way harder to implement. You know what I mean? But most people aren't looking at that. Most people aren't looking at the stock that's red or that gapped up and is coming down because human nature dictates that's not what you do. Why do I know that? Because I did that. If you're a spike chaser, if you're a chaser, whatever's green and going and you're trying to get into, and whatever's red is dead. And you're like, oh, it failed. That's what happens. So while all the new people and all the sheep are trying to get in on the green stock that's spiking, I am watching the one that has pulled back off of its gap and I wait for a bottom. And I have set risk and it's low a day. And then if it does gather itself, break through the open, then break through pre-market highs, and I'm in that low float because I've done all my work and I know what I'm doing, there's a possibility you are now, like everyone else is trying to get in and you are taking profits. Yeah, at the bottom of it. But people think of ABCD on, like people are only looking at like something that spiked in the morning and then pulls back and then does an ABCD. That's what people are looking at, a strong stock that's pulled back and then do an ABCD and then buying like through the high day break or on the pullback. Whereas like, I'm not looking at that. I mean, I do. That used to be kind of an entry I really liked. I don't really like it anymore. I found that my entries are much better and way less stress, you know, way less stress. Because I'm waiting for a bottom to occur on a stock that's pulling back for the first 15 minutes of the day, while everyone else just has to be in a spiker, dude. And I've been there. So you're in the spiker, that one fails, you're like, fuck that one. I'm going to try to get into this one. This spike inevitably fails while this one's breaking through high day and you're chasing that now again. Like, oh shit, it's back. Like, and you're trying to get, you know what I mean? Not me. Like, hopefully if it gets back to those pre-market highs or high a day, I've taken a chunk off already. And I've taken profits. And if it does break through pre-market highs and high a day, you're in the biggest round of the day, dead bottom risk. It's really cool. Once I realized that and quantified it, I'm like, this is all I need to do. Like, in a nutshell, on first green days, if I'm going to be only trading first green days, hopefully non-dilutive stocks, all that other stuff.
What's your process for you know, obviously we're looking for the ones gapping up, right? I mean, is that what you're saying? Looking for ones that are already gapping up from the day before. What's your process of finding those?
We'll go through that. You mean like the second day? I didn't quite get you.
Like the night before you're running your scan?
Night before, it's, you know what? It's usually morning of. Sometimes if there's a PR on a stock after hours, then that becomes a first green day for me. Most of the time, I don't really personally operate off a watch list all that much. I'm always looking for a first green day. Generally, it means a PR came out in the morning, it's gapping up for the first time. That is what I'm looking at. So generally, it's not something that came from yesterday. If it's something that came from yesterday or the day before, it's not a first green day to me. So
PTI is doing something real nice.
PTI, yeah.
That'll be a good short soon.
Oh, it definitely is. That's cool. But we'll get into that. It's noon. We're going to take a break. Unless there are any other questions before we go into break that you have to have answered. No, we got through a lot. Yeah, no, I mean, we got through a lot of really good information there that generally we don't really get into too much, but it was good. Yeah, I mean,
Yeah, you guys have good questions.
you guys have kind of an idea where we're going though with this the next 2 days. Like this is what we're going to try to accomplish is like get you to figure out how to narrow down to the runners, get you to realize the macro picture of what's involved. If you have the big picture, you can start whittling down like your personal shit. We all have issues. Most of us don't know the extent of our issues, but like this will expose it for you, a lot of your issues. I promise. It's exposed so much of my shit to me, my impatience and my impulsivities and like so, you know, a lot of what we do is impulsive. Like that's that green thing. Like, oh, that's an impulse. That, oh, like it used to be a ding, ding, ding. And I was fucking amped, like really amped going into market open, ready to catch that spiker, baby. Like today's the day, catching the spiker. Even if like I had losses the last 4 days and it wasn't working, every morning's a new morning to catch a new spiker. That's not like that anymore. I used to blast music going to the open. I still do sometimes, like some Santana or something.
It's kind of weird, but we're definitely not here to trade, right? Most of what we want to accomplish is to show you guys how little we actually trade and how much we ignore. And hopefully you guys have good questions and good insights and expand upon that. And that's what we're here to do. We're not here to make a trade in front of you because either way, you probably can't follow us into the trade. So cool, we can make money in front of you, but that doesn't help anyone here. So the fact that we are answering questions and that we're not trading is the intended purpose.
Yeah, it's live trading, which is cool. We'll be able to, if something pops off and we're going to trade, then I can go through process and narrate for you. But we're not trading most of the time. Like most of the time I'm not trading, and you got to get that through your head. Like you don't have to be trading all the time. There are times to trade. There are times not to trade. There are times where your money's much better off just sitting there.
In your account.
Yes. It's a position. It took me a long time.
Like I want to make 1 or 2 trades a week.
Seriously.
And like every week I make more than that, but that's bad.
Yep.
So that's a struggle for me. Is my wife is always, you know, I think that's kind of a stigma. I don't want to. Largest loss I took, I shut everything down and I left the house. And
It's not funny, but I've been there too.
honestly, well, and I drive
Just
Uber, it's
politely.
kind of a side hustle. So I shut everything off. I was disgusted and I was ashamed. And I thought, you know, I don't want my wife to know what I just did. Not because she would have been mad about the money that I lost. She's got enough confidence in me to know that I'm not going to do anything stupid.
Yeah.
I felt prey to them putting an offer and yanking it. And so, you know, fool me once, shame on you. But anyway, I left the house and I was so disgusted, I was ashamed of myself and I didn't want her to know. And it wasn't because of the money but that I would be a failure in her eyes, you know, that I messed up. And there you talk about being messed up.
Yeah,
That's a hurdle.
I don't tell my wife too much.
Yeah, but that's what, and she's like, so.
That's the
did
key.
you do- Did
Huh?
you do any good
Hold the
today,
daily.
sweetie?
Yeah.
Did you do any good?
Yeah, you know
Ah,
what? Those
what's
questions,
going on, hon?
those questions go away eventually when you're doing well. My wife doesn't care anymore.
I broke up with my wife. Look at the daily. It's pretty sick.
I don't talk to anybody that doesn't know.
All right, we're gonna wrap up. We're gonna take lunch. We're gonna start at 2. It's 12:05 right now. I'll probably be back soon. There's food kind of all around us, I think. I don't really know the area, but it looked like there's some food around.
That is a perfect breakup chart.
It's perfect. That's what's been happening.
I know. On a biotech, 280.
Green
Is
Redmond.
this room gonna be locked up or?
No,
I don't
it
think
does
so.
take a card to get up here into the room, but yeah, everything's safe here. Your stuff's safe. So yeah, we'll take a break. We'll resume in a couple hours here. Trade the clothes.
How do we get in and out?
Yeah, good question.
We'll be at the front there, or if you let the young lady know.
Yeah, they'll let you up as well.
On the 5th floor, she'll text us, and then we'll come and grab you and let you in.
Yes.
Yeah, remember there was that girl on the 5th floor that below the stairs?
Or she may bring you up here as soon as possible.
Bro, I'm gonna fuck PTI up.
If not, she'll text us. And we'll-
That's for sure.
Yeah.